It is Wednesday, December 18th. We are ready to hear the appeal of Joseph and Mojgan Boodaie. Case ID 180-11178. It is 10:11 a.m.
Thank you, Ms. Vaughn. Good morning and welcome to the Office of Tax Appeals. My name is Kenny Gast. I am the lead administrative law judge on this case. Joining me on the panel, we have Judges Richard Tay and Jeffrey Margolis. Before we begin, I want to cover a few brief housekeeping items before we go on the record, that is. First, let me ask, is everyone here today who's supposed to be here, starting with the taxpayer side?
Yes.
Okay.
We have one witness as well.
Okay. In addition to Mr. Boodaie?
Yes.
Okay. And for Mr. Hunter?
We're all present.
Okay. And do you have your witness here today?
No, not necessary.
Okay. Thank you. Okay. So just to briefly reiterate what I said at the pre-hearing conference, OTA is an independent agency. We are not a tax court, and this is meant to be an informal process. Note that all three judges on this panel are co-equal decision makers and may ask questions of the parties at any time. When we're on the record, please speak loudly and clearly into the microphones. Ms. Alonzo, to my right, will be transcribing whatever you're saying, and that'll be a part of the public record. Okay, and exhibits, taxpayer has submitted exhibits 1 through 17, is that correct?
Correct, and we have a new one. I made 5 copies. There's another document that we just got last night, a deed. I gave 5 copies to one of the staff here.
Okay, thank you. And Mr. Hunter, you submitted exhibits A through U?
That's correct.
Okay. And Mr. Hunter, you received exhibit 18?
That's correct.
Okay. And have you had a chance to look at it?
Yes, I have.
Okay. And do you anticipate objecting to it?
Yes.
Okay. Why don't we cover that on the record?
Sure.
We can discuss that as well as your objection to exhibit 17. Okay, before we begin, just to go over the time of the presentations. When we go on the record, I'll go for about 5 minutes just to introduce the case, then I'll turn it over to Mr. Weiss. Mr. Weiss, you will have 90 minutes. Mr. Boodaie will be testifying, is that correct?
That's correct.
And then Mr. Darvish will be testifying as well, is that your second witness?
That's correct.
Okay. Okay, and so you can do your arguments and testimony all at once, and then I'll turn it over to Mr. Hunter if he has questions of the witnesses. And then Mr. Weiss, you can do a redirect if you'd like. At that point, I'll ask the panel if they have any questions. And then Mr. Hunter, you'll have 30 minutes, and you won't have any testimony. And then at the end of that, I will ask the panel if they have any questions. And then I'll turn it over to you, Mr. Weiss, for 30 minutes for the final say. And then at the end, we'll close the record and the hearing. Okay, any questions before we go on the record? Panel? No. Ms. Alonzo, you ready? Okay. We are on the record. This is the appeal of Boodaie, OTA case number 180-11178. It is Wednesday, December 18, 2019. The time is approximately 10:15 a.m. We are in Los Angeles, California. I'm the lead administrative law judge, Kenny Gast. Joining me on the panel is Judges Richard Tay and Jeffrey Margolis. We are the panel hearing and deciding this case. May I ask the parties to please state your names and titles for the record, starting with the taxpayer.
My name is Joseph Boodaie, J-O-S-E-P-H. Last name is B like boy, O-Oscar, D David, A Apple, I India, E.
Thank you.
Walter Weiss, I'm Mr. Boodaie's attorney. W-E-I-S-S, and Walter's my first name.
Thank you.
David Hunter, H-U-N-T-E-R, tax counsel for the Franchise Tax Board. And to my left is Peter Kwok, K-W-O-K, also tax counsel for the Franchise Tax Board.
Thank you. I forgot to mention that this hearing is scheduled to be about 2 hours. If you need additional time, we can do that. But if you don't need all that time, you don't have to use all that time. Just want to be sensitive. We have cases after this. And also, we may take a break at about 1 hour into it for about 5 minutes. So just a heads up on that. Okay, for this case, we have 3 issues. The first issue is whether appellants must include in their gross income $3,256,232 of ordinary pass-through income from All Century Incorporated and S Corporation. The second issue is whether appellants are entitled to deduct $25,000 of passive rental real estate losses against their ordinary income. And the third issue is whether appellants are liable for the accuracy-related penalty. Moving on to the exhibits, I'll start with FTB's exhibits. Mr. Hunter, you submitted exhibits A through U, is that correct?
Yes, Judge Gadd.
And Mr. Weiss, there were no objections to those exhibits, is that correct?
Correct.
Thank you. So therefore, FTB's exhibits A through U will be admitted into the record as evidence. Taxpayers submitted exhibits 1 through 17, as well as an additional exhibit I'm going to mark just for now as exhibit 18. Mr. Hunter, you had no objections for exhibits 1 through 16, is that correct? Well, at least you only filed a written objection for exhibit 17.
That's correct, because that was the exhibit that was proffered after the pre-hearing conference. Understanding that this is an administrative body and the exhibits will come in, I'd just like to state for the record that a lot of the exhibits are irrelevant because they encompass a time and scope which is outside of the tax year at issue. Okay. So let that just stand as an omnibus objection when the trier of fact is weighing the evidence. Okay. And the same would hold true for the exhibit that was
18?
Yeah, produced this morning.
Okay. So I guess you're not objecting, you're okay with them being admitted into the evidence?
I trust this panel to weigh the evidence.
Okay, thank you. So I will go ahead and admit exhibits 1 through 18 into the record as evidence. Okay. Why don't we move on to the party's presentation? Mr. Weiss, you will have 90 minutes, but before I do that, I would like to have Mr. Boodaie stand and be sworn in, as well as the second witness, Mr. Darvish. I could do that at the same time. Is Mr. Darvish here?
Yes.
Can you please come forward and sit next to Mr. Boodaie, if that's okay?
Sure.
Thank you. Can you both raise your right hand? Do you solemnly swear or affirm that you will tell the truth, the whole truth, and nothing but the truth?
Yes, I do.
Thank you. You may be seated. All right, Mr. Weiss, you will have 90 minutes whenever you're ready.
Let me start with an opening argument, opening statement. A little background. Mr. Boodaie in 2008 had was in the real estate business. He also he was a real estate accommodator. And there's exhibits in there that showing the contracts with Dr. Rashdi, Ms. Rashdi, and Dr. Rustami, involving the exchange. Those are exhibits 2 and 3. We'll get to those. And we'll also get in the agreement, the exchange agreement, section 5.1 of the exchange agreement specifically says Mr. Boodaie has the right to invest the money in his discretion. That was, agreed to by the parties. So, and as you know, an exchange is 180 days typically by law, a deferred exchange. So, basically, Mr. Boodaie received the sum of $3,564,575 from the 2 exchange parties. I believe at the end of the 180 days, he remitted, I believe, $308,431, leaving a net sum of $3,256,232, which is exactly the amount of this deficiency. So, right at the time of the 180 days, Mr. Boodaie had an assignment prepared for both of these 2 parties, for Dr. Rashdi and Mr. Rustami. He assigned 2 promissory notes secured by deed of trust, and the total of those notes are totaled up, or about $5,192,000. So instead, really to get to the point, instead of giving back money, Mr. Boodaie had some issues, he gave these parties $5,192,000. The Franchise Tax Board omits this information, and I think that's a very bad thing they did. They should have, they're here to be objective. Both sides should have been submitted. That was given, and it was given as part of the exchange, because the exchange is 180 days. And even though the notes might have been given the next year, they're still within the 180-day period. As if he gave money, it still goes back to the year of the exchange. That's the year you're reporting. So these people got over $5 million. The record will show that Mr. Boodaie paid over $4,700,000 for the notes. That's Exhibit 14 and Exhibit 10. So really what we have here, it's almost like a sale or an exchange. He got the money, they got consideration far in excess. Exhibit number 17 and Exhibit 18 will show actually these people actually received value. Mr. Darvish will be here to testify that he paid them off on the $2,100,000 note that Mr. Boodaie gave. And the last exhibit shows a deed by, I wish she was here, I'd love to have her testify, because her signature's all over it, by Mrs. Rashdi, indicating that the property in Vegas was given over. So a lot of facts are omitted, a lot of facts are not disclosed, and I really think it's the job of the Franchise Tax Board. They're auditors, okay? I know we're here, it's litigating, but you gotta play both sides here. That's the way it works. And I'm sure that's in their audit manual, I don't have it in front of me. It says, an audit's an audit, pro and con. So that's what we've got here. And, we'll get into Mr. Boudai's testimony, but it was a tough year for him. He'll testify to that. That essentially, he had health problems, he was starting a divorce, and there were a lot of problems. And I'm not going to say Mr. Boodaie is perfect. Okay, he's not. But the point is that, when there's real value given, and when they, if you're going to say it's income, well, then you got to give the man credit for whatever he gave back, because there's value, there's basis. So there's actually a loss here on paper of about $1.5 million. All right, so I'd like to call Mr. Darvish first, because he's kind enough to come down here, and we can put him on and we can let him go if that's okay. It's out of order today. If that's okay with you guys.
Yeah, except if Mr. Hunter has questions for Mr. Darvish, I'd ask that he stay for that portion, if that's okay.
Can they question him? Can we do both, maybe?
Yeah, that's fine.
So I would let them go question him while he's here, and then we could...
Yeah, after Mr. Darvish testifies, if Mr. Hunter, if you have any questions...
Sure.
You can go at that point. Okay, that's fine.
Okay.
No problem, thank you.
So I want to call Mr. Darvish. Okay. I guess we'll move the microphone over to him. Okay.
Yes, please.
All right, Mr. Darvish. Please state your name.
Sohail Darvish.
Okay, and you know the gentleman next to you. How are you familiar with the gentleman next to you, Mr. Boodaie? Explain to me your relationship with him.
Well, it was a business relationship, and my company back in 2004, 2005, we borrowed money from multiple properties through All Century.
Okay, and let me show him. I don't know if there's copies. Witness has copies. I can show him my copy if you want. Exhibit 17. Okay. There's a document here, and let me ask you if I can put this in front of you. You both can look at it. Was E&D Holdings LLC your company?
Yes.
Okay, and how many members in the LLC? Do you have a partner?
Yes, I have a partner.
And what was your partner's name?
Joseph Israel.
Okay. So the borrower was E&D Holdings LLC. Okay, all right. And let me turn to the exhibit here. And do you recall how much money you borrowed from Mr. Boodaie?
Over $2 million.
Okay. And there's a document here. It's exhibit number 13. Is that your signature? I'm sorry, that's Mr. Boodaie's signature. Is that let me go back here. I'm trying to find the document, the actual, the mortgage document. I think it's Exhibit 16. Let me find this document. Let's see. Maybe Exhibit 6, let's go with this. Okay, here we go. All right, let's see the same document. Okay, well, all right, why don't you, let's go to Exhibit 6. Please tell the board, or I'm sorry, not the office, the tax appeals, the judges, what this document is to the best of your knowledge.
This is a copy of the assignment of the mortgage that pertaining the mortgage that we took originally from Mr. Boodaie through All Century, and this is the assignment of that mortgage to I think Mr. and Mrs. Rashid.
Okay, and you discussed this document with Mr. Boodaie.
What do you mean?
Well, you were aware of this document? That
Yes,
Mr.
of course.
Okay.
Yes.
Did you ever communicate with the Dr. Rashdi?
Yeah, we had multiple phone calls.
Okay. And then, did you pay off
Yes.
Dr. Rashdi? And
Yes.
okay, and can you explain? There's a document, Exhibit 17. Please describe in your own words, the best you can, what this document is.
Well, this document is the satisfaction of the mortgage. As we sold the properties, we paid them. We paid Mr. and Mrs. Rashid off at the closing.
Okay. Do you remember how much the payoff was?
It was, I don't remember exact number, but this is for a full amount of satisfaction.
Okay. Okay. I have no further questions. Oh, one other thing. Was there... Okay. Page... I guess page 3 of the agreement. Why don't you tell the judges what this document means and there's what this means to you. What's the document title? This one, if there is a title.
I'm sorry, what exhibit is that?
It's page 3 of Exhibit 17. Yeah. Actually, let me see. Page 3. I'm sorry. Yeah, page 3 of Exhibit 17.
Well, it says clearly on top, it's a satisfaction of mortgage for the loan of $2,100,000, and it also states that's pertaining to the loan that was made by All Century Inc. to E&D Holdings, which was one of our LLCs. And this satisfaction was signed on November 12, 2010 by the lenders, or by the people that had the assignment of that mortgage from Mr. Boodaie. That would be Mrs. Rashdi, Mr. Rostami, and Mr. Rashdi. And the acknowledgement is attached to it.
So how was this done, so that, you're familiar with their signature, the Rashdi's signature?
Well, I'm not familiar with their signature, but it's been notarized by a notary public here in Los Angeles.
And after that document was signed, sometime in 2010 it was like, did you ever hear from Dr. Rashdi or?
No, no.
So to the best of your knowledge, or your understanding, that was it, they were paid in full?
Yes.
No further questions?
Thank you. Mr. Hunter, would you like to question the witness?
Sure, Mr. Darvish, just to get this straight, in 2009, let's say a partner, another individual, yourself, who owns this company, received $2.1 million from All Century, is that correct?
2009.
Sorry, yes, the assignment, I'm sorry, 2006. When was the date of the initial mortgage from All Century to your company?
Let me look at the.
It's actually exhibit number 4, is the blanket mortgage, if it'll help us.
2006.
Got it. And that was a debt owed by your company to All Century, is that correct?
I'm sorry?
That was a debt, a mortgage, money owed by your company to All Century, is that correct?
Correct.
Okay. And in March of 2009, this debt owed by your company to All Century was assigned to another party, is that correct?
Well, that's the, yes, correct.
Okay. So now let's go back to exhibit
Let me just
17.
confirm the date, 1 second. Yes, 2009.
Okay. So now exhibit 17, it purports to be a satisfaction of this mortgage, and the date is November 12, 2010. Is that correct?
I see the satisfaction.
Oh,
This is the mortgage on the note.
okay, let's get the satisfaction.
And this is the assignment.
I think you have it, let's take a
No,
look.
it's not here.
Oh, here we go.
I'm sorry, can you repeat the question?
I'm just asking about the date of this document.
The satisfaction of the mortgage is dated this November 12, 2010.
Got it. And the question was asked, I want to make sure that we're clear. For these 3 individuals, Dr. Rashdi, her husband, and Mike Rostami, how much money did they receive as a result of this satisfaction?
Don't remember the exact amount that they received, but this satisfaction is for the entire amount.
Well, if the mortgage was satisfied, that means your company paid it off, correct?
Yes,
So how much did you pay?
I don't remember. I don't have the document with me. It's way too long. It's past 9 years already.
No further questions.
Thank you, Mr. Hunter. Mr. Weiss, would you like to do a redirect?
No further questions.
Okay.
We can let the witness go if it's okay with.
Well, let me ask the panel, are there any questions for the witness?
Did Mr. Rashti or Rostani, did they sign anything in connection with the actual assignment? Did they accept it or acknowledge it when it was given?
You're asking me?
Yes. Did they sign? I'm asking the witness. Did they sign any documents accepting the assignment?
Well, what they've done, no, I don't think the laws in New York, anyone needs to accept. Well, obviously they could have rejected it, but the assignment is actually signed by Mr. Boodaie to them. And then, then there is a satisfaction of that mortgage that it's signed by the Rashtis and Rostami.
Okay, but at the time that the assignment was made, they didn't agree to accept payment in the form of a deed of trust, did they?
I'm sorry, I don't understand.
Did they agree to accept the deed as payment at the time the assignment was made?
Well, in fact, I don't know Mr. or Mrs. Rashti or Mr. Rostami. I've never met them in my life. They called me, in fact, and they said, we have an assignment of the mortgage from Mr. Boodaie, and you need to pay us for it right now.
Okay.
Is that it?
Yes.
Okay. Judge Taylor? All right, Mr. Darvish, you're free to go. Thank you for your time.
Thank you.
I guess we can call Mr. Boodaie
Okay.
All right. Okay. Just give me a second, I want to put my exhibits back. I should have had other copies, but let me put them in order, so. Okay. In 2008, what was your occupation?
I was an accommodator and dealing in real estate, mainly in real estate and lending money and doing acting as an accommodator.
Did you also own real estate?
Yes.
And let's go back to the year 2008, in particular 2007, 2008, thereabouts. What was your financial status at that time? Were you having any problems? Two questions, you can answer one and the other if you'd like.
So what year are you mentioning?
Let's go to 2008. What was your financial position in 2008?
In 2008, the financial position was good. I had assets and some liabilities, but the net worth was a good net worth. The financial was good in 2008.
Well, wasn't the real estate market crashing at that time?
Exactly. They said this was the first time for the last 100 years that we had a real estate very up. So most of the people like me, we had a liquidity problem.
Okay. And also, how many years did you act as an accommodator?
Since 2004.
And going back to 2008, did you have any health issues?
Yes.
Please tell the judges what they were.
Mostly because of the financial problems that due to the economy, and also we had some marital issues. I had anxiety that I was taking different pills every day, and mostly a lot of stress and anxiety, and I went to my doctor, and I went to UCLA, I had to take pills.
Okay, and tell us a little more about the marital problems you were having.
You know, I don't know if it is related or not, but since the financials and the situation were going down, I have 3 children and we had marital issues, and I was worried about the well-being of the children. So always it was bothering me that the wife wanted to leave home and not to be with me.
Okay. Prior to the exchange, did you know Ms. Rostami and her spouse? Did you ever meet them?
Prior to exchange, no.
Had you ever done any, so did you ever speak to them or do any business with them?
No.
Okay. With respect to Dr. Rostami, Mike Rostami, did you ever speak to him prior to the exchange?
I don't think so, no.
And same question, did you ever do any business with him?
No.
How did these people, Rostami and Rashti, come to your office? How did they, as an accommodator, who referred them?
You know, I was very famous in the community with doing exchange and real estate. So there was an accountant that I heard about him, but honestly I didn't know him well also. This accountant was Dr. Rashti's accountant. When Dr. Rashti asked that accountant, can you refer me to an accommodator? So that accountant, his name is David Gadushin, that David accountant referred Dr. Rashti to my office to do their 1031 exchange.
Had you ever done any business with Mr. Gadushin prior to this exchange?
Not at all.
Okay. All right. So are you aware that Dr. Gadushin was also sued by Ms. Rashti?
Yes, I was aware that this poor guy, even though he was just doing a referral, they went to him and they said they sued him. They did file a lawsuit against him for referring me to them.
Do you know what happened to the lawsuit, was the result? Let me rephrase it, I'm sorry, that was a bad question. Strike that question. Do you know the result, did Mr. Gadoshin and Ms. Rashti settle their lawsuit?
Yes, they.
Was any money paid to Ms. Rashti?
Yes.
Okay. Was any money paid to Mr. Rastami?
I don't know.
Okay. All right. So, okay. And when you received the money from we'll call them Rastami and Rashti, we'll call them the exchange party for purposes of our understanding. When you received the money from the exchange party, was the money invested?
Yes.
Where was it invested?
You know, there was a pool of money I cannot locate or substantiate or separate the monies because the money were going to the same bank account and I was using it for different investments, paying for loans.
And, okay, and did you tell Ms. Rashti that you were going to invest the money, their money that she gave you?
They knew from day one, number one, it was part of the contract that our century had the right to invest the money. And I told them that they can benefit from this. They were benefiting by me paying them interest on their money.
So if the money would have sat in the bank, or in an interest-bearing account, what, do you recall at that time, what the interest rate would have been?
I don't know the exact number, but it was maybe 1 or 1.5%.
And now that the money was invested, how much were they earning on their, funds they gave you? Do you recall?
Something around 7 to 8%.
Okay.
I'm sorry, it was how much percent?
7 to 8%. 7 to 8%.
Okay, let's go to exhibit number 2, and also the same as in exhibit number 3, which is the exchange agreements. Please read to the judges, what does section 5.1 say?
I'm sorry, which number?
5.1, that's exhibit number 2.
You want me to read it? It says
yeah, read it out.
Exchanger agrees that intermediary has the right to invest their funds at their discretion.
Okay, and that was explained to Ms. Rashti.
To all the clients that they were dealing with me, they knew about this, yes.
So they were aware that the money would be invested, in notes or other type of investments.
They didn't know exactly what kind of notes or what, but yes, it was invested in notes or real estate, yes.
Okay. You're aware that when you received the money, I believe you received the money from them, it looks like in September, was it September 12th, 2008?
Correct, based on this date, yes.
Okay, page 1 of the exchange agreement. Okay, so and how many months do you hold their money typically?
All right. The exchange agreements or the laws of, it's a federal law that says within 45 days they have to identify a property. If they don't identify, they're going to lose their exchange. And normally, it's not my practice, other exchange companies also, they keep the money for 180 days. and then we ask them to see what they want to do with the money.
Okay.
So they have, sorry that I'm repeating, we have 45 days to identify the property that they want to exchange with, and they have 180 days to close. But if within the 45 days, which is in this case, within 45 days they did not identify the property, so within 180 days, I would ask them the direction that they want to do with their money.
Okay, and they were aware that they would get back, there's a possibility they would not get back money, but they would get back other assets equal to or more than the amount of money they invested.
The very first question that you asked me about the problems in 2008 and 9 was liquidity. There were a lot of assets sitting there, but unfortunately, starting end of 2007 or beginning of 2008, the bank started not to give loans anymore. So when I lent the money, for example, to the guy that was a witness here, within a short period, within the 30 days, because it was a short lending money, he would go to the bank, get a conventional loan, and give me my money back, and I had liquid asset all the time to pay the people. But because of that problem in 2008 and 9, I already explained to all my clients that, listen, the banks are not giving any loans, so I may not have liquidity to give you the money. So what I can do is, I have notes that if it is liquidated, you can get your money back. So since you need your money back right away, if you let me, I go and collect the money from the borrowers. But if you are in a rush, I'm more than happy to assign my rights, which one of them was him, and there was a second note also that was transferred to Mrs. Rajdi and Microstami. In lieu of giving them the money, I gave them the notes and assigned it to them. It was recorded, and then as the witness testified, it was liquidated, and he gave them the money.
Well, let's go back there. Let's go back there. So when 180 days came around, Miss Rashdi did not didn't find another property to buy.
Correct.
And also within 180 days, Dr. Rustami did not have a property to buy.
Correct.
So after 180 days, they asked for their money.
Yes.
And what did you do at that time?
I told her to come to my office that I can discuss, and I explained the situation I just said a few minutes ago. I told him about the liquidity and told him either I liquidate for you, liquidate and give you cash, or I give you the notes. She said, no, just give me the notes. We're going to go after them and get the money ourselves.
So she personally, did you tell her you were going to prepare assignments to her?
Yes.
And,
Excuse me, who is she?
I'm sorry, Miss Rashdi. I'll re-ask the question. Did you tell Miss Rashdi that you were going to assign some notes in collateral to her?
Yes.
And what was her response?
This was the agreement that I told her. She said, no, give me the notes, I'm going to liquidate myself. So in order for me to give notes to somebody, I have to just notarize it and send it to the title company to record it, that the note would transfer from my name, or the Arsenchi's name, which was my company, to her name.
All right. Let's turn to exhibit number 4. I think Mr. Darvish was here. Was this one of the notes? Was that one of the notes you gave to her?
Correct.
Okay, and that note is between E&D Holdings and your company, I believe, All Century Inc. And All Century Inc. was your company.
Correct.
Okay, and what was the face amount of that note?
The face amount of that note was 2.1 million.
Okay, and let's go to exhibit number 14. Okay, and what is exhibit, in your own words, please explain to me what exhibit number 14 was.
When we give loans, we have to wire transfer the money to that personal entity. HSBC was the bank that I was dealing with, and we sent them $2,057,945. That was the net amount for 2.1, because usually there was some accrued interest and everything else, but as I mentioned, the face value of the note was 2.1, but the net amount that it was wire transferred based on this notification from HSBC Bank here in California was $2,057,945 that was sent out.
And who was it sent to?
To Sohail Darwish.
Is that the same Sohail Darwish that just testified?
Correct, yes.
Okay. All right, so that, Mr. Boodaie, so the face amount of the note was $2,000,001. This is proof that All Century paid, this was the wire to him, the $2,057,954. That was what you paid for that, what you lent actually to him.
Correct.
And that was the same money that Ms. Rushdie received.
No, can I explain it very short?
Sure.
The 2.1 million was face amount of the note. Since this note, he hasn't paid for almost 2-3 years. So if you remember, the witness said, I don't remember the amount, but he knew the face amount was 2.1. It was the money that was paid to her for satisfaction of the mortgage was the face amount, which was 2.1, plus the accrued interest for the period. So definitely the money is over $2.1 million that she received, not 2.1. That's 2.1 plus accrued interest for that period that the interest was not paid.
And do you recall the interest rate that was paid on that?
The interest rate on that, I think, was about 10%.
All right, so, okay. So let's go to, and let's go to the, let's go back to Exhibit 13. And was that that note, is this the same note, the assignment, is that the same note that was assigned to Mr. Darwish? Or I'm sorry, it's assigned to, let me strike that. Was this, you just identified the blanket mortgage, and now this is the same document, a collateral assignment of blanket mortgage that was assigned to Mr. and Mrs. Looks like Rushdie and Mr. Rastami.
Yes.
Okay. And who prepared that assignment?
My office prepared the collateral assignment. We sent it to the title company. No, by the way, it was notarized. Then we sent it to the title company to record it, and the recordation is up there. So it was recorded. It means that to the public, it was transferred from my name to Mrs. Rushdie and Mr. Rastami. So practically, this would answer your question that you asked the witness. When you assign something to somebody, when it's delivered and they get it, it means they accepted this. If they reject it, as he said, they said, no, I don't want it, and they give it back. So the only one that has to sign and notarize is the note holder, which was me. It was signed by me and notarized and recorded to her name, to Mrs. Rushdie and also Mr. Rastami. And then when they accepted this, they started to collection. So if they didn't want this, they wouldn't go after this to collect it from the witness and the other note that I gave. So both of them was assigned, and again, not to be repetitious, assignment means that only the note holder would have signed it, which it should be my signature. We don't need any acceptance on this. And this is a standard form from government for collateral.
So it was assigned in 2009, and when was it paid off in full?
Yeah, it was assigned on April 3rd, 2009, correct?
But the assignment's not cash. When was it paid off in full? When the note was paid off when it was sold in 2010?
Yes, correct.
Was the property sold at that time? Is that why they had cash to pay it off?
Not the property was sold. The lender, I'm sorry, the borrower got the money together and paid her off in full. Then we have satisfaction of mortgage from the state of New York that it was satisfied and paid in full. And we have also an agreement that shows that the 2.1 plus interest was paid in full.
Okay, so from your experience, there's never any place where the assignee, which would be Dr. Rustami and Ms. Rashi, there's no place ever for the assignee to sign the collateral assignment.
That's correct.
All right. So did you physically hand them these documents after the assignment was recorded?
Yes, I did.
And approximately, what was the date of that?
This was sometimes on April 3rd, right after the 180 days expired, something like that, very, very close to that period. That they asked for the money, and I told them I'd give it this in lieu of the cash money.
Well, if you kind of calculate, maybe within 30 days of the, after the 180 days expired. Isn't the date on here?
The date is April 3rd of 2009. Their exchange was September of 2008. After 180 days, it would come almost end of March. So less than a month period that we negotiated, I gave them this for the satisfaction of their money.
All right. In addition to the note, well, by the way, the properties that secured that note, what, to the best of your knowledge, what were those properties that secured that note?
It was a commercial property in the state of New York.
Okay. All right, let's go to give me 1 second. Okay, let's go to exhibit number 5. Please tell the judges, what is this document?
This is a promissory note.
And who is, who's the borrower?
The borrower was Ray Kurokli. Actually, there were 3 borrowers. That's on the last, on page 4 of this document, that they all signed. And this one is a promissory note that I gave these people $3,092,000. The exact amount is $3,092,002.70.
Okay, well, did you actually give them that much, or did you give them less?
Normally, this is the note amount again. The interest is accrued, the interest is added. For example, if today I'm giving somebody a loan for $800,000, I would calculate also a month in advance for interest and any fees related, and I deduct it from there. So this is the notes, the face amount of the note, but the money that was paid definitely was a little bit less than this because of the accrued interest. and also because of other expenses.
So, in other words, there's a discount, you deduct fees or prepaid interest in advance from the face amount of the loan, and they give you less, so you're deducting interest in essence in advance.
I give them less. On this note, we agreed that they pay 1 year interest ahead of time on this note. So we calculated the interest for $3 million, 92,000 for 1 year, plus other expenses, and we gave them the net amount.
Let's go to exhibit number 10. What is this document?
This document is from Comerica Bank. I was dealing with two different banks. It's Comerica Bank is the one that the company was dealing with. It shows that we sent this borrower the net amount of $2,689,860.14. I can repeat again, $2,689,860.14 cents. It was sent to them to satisfy this note of $3 million. That's the net amount after accrued interest and everything else.
And the borrower was it All Mariners LLC?
Yes, Morines View. Morines View was the name of their company, and there were three partners in there. The names are here: Ray Crowley, Hamid Mahban, and Michael Mona.
So these three individuals were, they owned Mariners View, it was like 945 Mariners View LLC.
Correct.
And what was the collateral for the loan? What type of property was it?
There was a big subdivision land in Laughlin, Nevada, that they were building new housing there.
Okay. All right. So you would say development site, development property. Okay. Then this loan was also assigned to Ms. Rastami and, I'm sorry, Dr. Rastami and Ms. Rashti.
Correct.
Okay, and the assignment is, let's go to Exhibit 12. Was this the assignment, was this the same property that was assigned to them? The Las Vegas, the Nevada property?
Correct. Through the title company, which was Southland Title, I did a collateral assignment again, and that note also in Nevada, Laughlin, Nevada, was assigned to Mrs. Mahnaz Rashdi and Mike Rostam.
Okay, and who prepared that document?
This document is a standard document that was prepared in our office, but it was recorded by the title company.
And after it was recorded, did you hand them a copy? Did you give them this paper, the collateral?
Yes, I did.
Okay. And approximately when was that? If you can recall, what time period? What was that?
This one, more or less, is at the same time. It was prepared and notarized on April 3rd, and then it was recorded April 3rd of 2009.
And after you gave her that document, did she, was she satisfied that you had given her back these assets in lieu of money, the money?
She asked me the information about the two borrowers, which I gave it. I said, listen, even though I assigned everything to you and your brother, which is Mrs. Rashdi and Dr. Rostami, I said, I'm going to be helping you. These are the information about the borrowers. You can go collect your money, and if you, anytime you need help, you can call me, that we can we make sure that you get your money back.
So the way I calculate it, when you take the New York property and the Las Vegas property, the value of the notes are $5,192,000. Is that correct?
More or less correct, yes.
And when I calculate what you paid for the notes, it's $4,747,805.
More or less correct, yes.
Right, so under any scenario, they received over $1.5 million more than they gave you.
But that's correct.
Okay. All right, let's go to one other document. Today, and I apologize for getting it late, but I guess Mr. Boodaie, you got it late. Exhibit 18 is a document, and what the document, I guess it's called Grant Bargain Sale Deed. Okay, Mr. Boodaie, what is this document? Where did you get this document?
I got this from the title company in Nevada. I was told that the notes in Nevada that I assigned to Mrs. Rashdi and Mr. Mojgan, they went ahead and they foreclosed on the property. So they owned it, they owned the property, and sometimes in 2017 they sold it.
Okay, so do you know when they foreclosed on the property?
I don't.
Who told you they foreclosed?
I heard this from the borrower.
Did the when you say you heard this from the borrower?
Borrower is
The borrower.
probably in Nevada.
Hold on, let me ask you a question. Hold on, wait, hold your answer.
For the reporter, can we not talk over each other?
Right, well, that's why I want to go back and strike it. Let's go back and ask him, because he, all right. When you say you heard from the borrower, please explain what that means.
The borrower in Laughlin, Nevada, the main person was Ray Kirokli, which he contacted me and he said, the note that you gave to Mrs. Rashdi and Mr. Mojgan, they foreclosed on it and they took over the property against the which, so they took it, they said they're going to go ahead and sell it at the property.
So when you say you heard from him, you meant Mr. Khraich told you this?
Correct.
Do you know what year the property was foreclosed upon?
I honestly don't recall the exact year.
Okay. And why, did you try to get Mr. Khraich to come here to testify?
Yes.
And why could Mr. Khraich not testify?
Mr. Khraich recently was in a freak accident in Nevada. Apparently he was doing something on the roof of a property and he fell down and physically he cannot walk. So he apologized, but he told me if it is necessary and he's available, he can talk also.
Okay. Are you familiar, okay, so this is a deed, this document, right? This is a deed, correct? From your, being a real estate broker, you can identify this. What type of deed is this?
Grant deed, they call it grant bargain sale deed. It's a little different from California. In California, we only call it grant deed, but in Nevada, they call it grant bargain sale deed. And this is when they sell the property and transfer it to somebody else.
So that's it, okay. So, are you familiar with Del Cannon Investments LLC?
Del Cannon, according to the paperwork that I received, Mrs. Manas Rashdi was the manager of that LLC, which she owned 100%.
And on page 3 of that document, okay, on page 2 of that, that's your signature, correct?
I don't know, but it was notarized, and there's an acknowledgement that the signature was notarized by a notary, a public notary.
All right, okay. So from this, it took a while, but from this document, it looks like she was, the property was sold and she was paid a lot of the proceeds of that note.
Very good.
And on the top right-hand corner, there's a, if you're familiar with this, there is there's a number here. There's a RPTT 1632. Are you familiar with what that?
I'm not familiar. These are from the state of Nevada. I'm not that familiar, but this is the transfer tax that they pay. Most of it is very similar to California, but different rates.
So, in fairness, they paid, if there was a transfer fee, there must have been valuable consideration.
Correct.
All right.
Before we move on, can I ask a question about this document? It just, the transfer sales price seems to be $320,000 according to this document. Is that the price it was sold at? If you look on page, where we talk about the transfer receipt, it's the second to last page. It talks about $320,000. So is that the price it probably was sold at?
I don't know. Oh, I see what you're saying.
I'm just a little confused because I thought the note was had a face amount of like $2 million or something, or $2+ million.
More than that. Maybe.
Just want to clear this up before we move on.
Okay, you have to go back to original notes because there were different assessor numbers, there were different lots. Apparently this was one of the lots that she sold in 2017.
Okay, so
This is one of the lots, one of the lots in that note because a $3 million note, this was a note, not the purchase price, could not go back to 300,000, but here they are identifying on number 1A the parcel number. These are one of the parcels that was sold in 2017.
okay, thanks.
Sure.
Well, let me go back there.
Sorry, I apologize. You said we may have, because I have to take some medicine, can you have a quick break? Or,
Yeah, would you like to take a quick break,
Yeah.
Ms. Alonso? Okay. Why don't we take a 5-minute break,
I appreciate it.
get back here at 11:20.
Thank you.
Thank you.
Okay, thank you.
You're off the record.
Was this their son? But it's really short and sweet. I mean, I see this a lot. Some numbers, it looks like it's. I know Michelle's beginning. I didn't hold my breath because I love it. I guess what I'm saying is that when you have kids at home, that's on that, I think that's too. We're gonna be a bunch of Jewish friends that didn't eat restaurant. There you go. So my favorite is
Should be called, but it's called Hawaiian Gardens. Should be called Long Beach, but I don't know. It's the guy, whoever was living next door to me, was raising hell. We woke up at 6:37 this morning. Phone call. I don't know. And I hopped in the car and both my front tires were burning.
Appreciate that.
Yeah, not too bad. Just taking it. I was flying into Long Beach. It's an old school airport, but they still have the thing that goes up to the plane, they have the steps. Yeah. So that was about to back. But I got here too late. I thought I could swing everything I used to do at home. My flight left back at 6:55, but I landed here at Long Beach 8:20. So by the time I got the car, threw the stuff in the hotel, I'm like, okay, let me grab a taco. It's like 9 o'clock. So I was still able to get something and then kind of prep me for this. I don't want to get too deep, but you know. How's it? First look.
Yeah, just tell me more.
Well, we know that, the exhibit, which is a footer on each document, so much easier.
Yeah. You might have to do that.
Sorry, it looks like he's stuck in the bathroom or something, Mr. Boodaie.
Okay.
They have some difficulty.
Okay.
So we will try back.
All right, thank you.
sorry, he was in the bathroom. You okay? Joseph?
I'm good, thank you.
Yeah, sorry about that.
No problem.
So,
I was waiting outside the bathroom the whole time.
So that's okay. I think we're waiting for Mr. Hunter.
Yeah, he went,
Okay.
he just went, yeah.
All right.
So,
Yeah, he's fine, he's fine, I was worried about him, yeah. Thank you. Okay, that's it.
Okay, I think we have everyone back. Why don't we go back on the record? Mr. Weiss, you're up still?
Yeah, let me just a couple more questions. Okay, let's go to exhibit number 10. Okay, I think we've been there. Let's clarify this. How much money did you loan Mariners View LLC, Mr. Khraich?
I already gave you the face amount, but the net that I paid them with the wire transfer from Comerica Bank was $2,689,860.14.
So you believe the value of the property at that time, as a lender, there was enough equity in the property, the value of the property at that time, to make a loan of this amount?
Exactly, and I did some checking myself, so yes.
So those were money that All Century actually spent or loaned?
Right.
All right. Now, what's the date of that?
October 30th, 2007. That's when the money was sent.
All right, and
October 30th,
and your testimony
Wait, I'm
was?
sorry, that's when the money was what?
was wire transferred to the borrower.
He said sent. Yeah. Sent. Yeah. So let's go back to your testimony. Your testimony was you gave them, you assigned this note and gave them the assignment in April 2009.
Correct.
So the time period between the loan and the assignment was maybe not even a year and a half.
Correct.
All right. So at the time you assigned the loan, at that time, the property, to the best, in your opinion, or the best of your knowledge, how much equity did the property have?
Usually for the properties in Nevada, I would give only 50% loan to value. So to me, they purchased this property over $6 or $7 million.
All right, so then the question that Judge Margolis raised was, why was it only $300,000 in the year 2017? Do you know why?
I don't. I'm not that familiar with Nevada, but as I said, there may have been different parcels too.
Do you know when Dr. Rashty actually foreclosed, or Miss Rashty foreclosed on the property? Do you know approximately?
I was told as soon as she got the two notes, she went after both of them. So it may have been foreclosed in the same year, and also she went to the New York property at the same year too.
So what's the same year? What year is that?
That was in 2009, sorry.
Okay. I have no further questions for Mr. Boodaie.
Okay, thank you. Mr. Hunter?
Yes, Mr. Boodaie, if you could be so kind, I have a couple of questions for you.
Sure.
Should not take too long. Now, let's get back to this Exhibit 18 that was produced today. And I want to follow up on Judge Margolis' question about the amount here being a mere $320,000. You mentioned that this represents perhaps just one of the lots. Is that correct?
Correct.
Okay, so let me turn your attention to, I think it was Exhibit 5. That's October 25, 2007. The promissory note secured by a deed of trust. And this is when All Century lent the money, here, $3 million, to Mr. Khraich. The last page of that exhibit has an APN, which is 264-28-710-001. You see that?
No, I don't. What page are you referring to?
The last page of Exhibit 5.
You're referring to the promissory note secured by deed of trust?
That's correct, last page.
Last page is page 4, is that right? It's numbered on the bottom 4. I'll make sure we have the same document.
It should be 5. My exhibit's not numbered.
At the bottom of the page, it's a 4-page note.
After that note, I have a deed of trust with assignment of rents.
So that's fine, that might be right. Promissory note secured by, is that Exhibit 11 maybe?
It's the last page of Exhibit 5.
Hold on,
It was originally your Exhibit D.
yeah, let me find it. Hold on a second. It's a deed of trust document. Hold on. Let me find it here.
Mr. Kwok, would you?
May I?
Yeah, please. We have a copy here, but after
Yeah,
you
let me
leave.
just make sure, because I've got, oh, okay, all right, thank you. That's what you're referring to, okay.
Yeah, that's correct. Look at the middle of this page. APN 264-28-710-001. 14.09 acres between Needles Highway and South Bay Parkway in Laughlin, Nevada. Do you see that?
Yes, I do.
Is that accurate?
I don't know. I just see the APN number here. The number that you read me, it's right here too.
You're a real estate broker and an agent. You didn't verify the accuracy of this document?
No, as a broker, we don't do that. The title company, I think that they do it.
Well, you lent money based on this being your security. Is that correct?
I'm sorry, repeat the question again.
This is an assignment of rents, and did All Century loan money with this document acting as security?
Document and what? I'm sorry.
Let's move on to Exhibit 6.
Exhibit 6.
It's a collateral assignment of deed of trust.
Oh, are you asking on the deed of trust with assignment of rents?
I've moved on to Exhibit 6 now.
Exhibit 6 right now.
It was when there was an
Well, I don't think the
assignment.
witness answered the question. Can we read it back and make sure the witness answers the question, because I didn't get an answer. Maybe I didn't-
Mr. Hunter, go ahead and ask that question again if you'd like. Otherwise, you can move on to Exhibit 6.
Yes. I don't
Okay,
think
let's
this
move
is-
on to Exhibit 6. Go ahead.
It's a collateral assignment of deed of trust, again, in the middle of the page. APN 264-28-710-001, 14.09 acres. You see that, Mr. Boodaie?
Yes, I do.
Okay. Yes. And again, on the document that was introduced today, the same APN, but with the value of $320,000. And it was your testimony that that was one of the lots. Is that correct?
Most probably because the value of the $7-8 million could not go down to 300,000. Number one. Number two, if you remember, I said it was a development site that may have been subdivided. We have to check that because there is no way something would go back to even the 3 million that I gave them. As I told you, the value should have been 6 or 7 million. So this is not even 5% of that value, not 5%. 10% would be 600,000, 300,000 would be 5%. There is no way that 14-acre land for 300,000 in Laughlin, Nevada. I've dealt with the Laughlin before. There's no way that 14 acre could go for 300,000. It was a subdivision. Most probably they subdivided that, or
Most probably. Do you have any evidence that this was subdivided, sir?
I'm sorry.
Do you have any evidence that this 14 acres was subdivided?
The only thing that I don't have any evidence, but the only thing I can say is the $6-7 million value cannot go down to 300,000 within the period.
Okay. And again, on this particular assignment, the assignment was made to the Rashtis and Rastani in 2009. Is that correct?
Correct.
Now, earlier in your testimony, the question was asked of you if the lawsuit against yourself and David Gadoshian had been settled. Do you remember that?
Yes.
Okay, you indicated that the lawsuit was settled. Is that correct?
The question was David Gadoshian and Mrs. Rashti. I said that one was settled, yes.
But not the lawsuit against you. Is that correct?
I'm sorry.
But not the lawsuit against you, where you are a named plaintiff in the same lawsuit. Is that correct?
With my little knowledge that I have from law, I thought after I gave them the notes, it was the satisfaction of their debts and the lawsuit.
Okay. In 2008, did Dr. Rashti come to you and identify replacement property?
No, she didn't.
Again, let me repeat the question. Towards the end of 2008, did Dr. Rashti identify replacement property for you, sir?
End of 2008?
Yes. The replacement period is 45 days, right?
No.
That's the per the contract, that is the time to identify replacement property.
It's not the replacement period, it's the identification period.
Did she identify replacement property before the end of tax year 2009?
I don't recall, and I don't think so. I don't recall.
I think you mean 2008.
I'm sorry, 2008. Thank you, Judge Marcos. I'm trying to expedite things. The question was asked whether or not the Rashtis and Mr. Rastami agreed to accept these notes or blanket deeds of trust and instead of cash, the cash that represents the proceeds of the sale of their property. You testify that they did agree to receiving notes and blanket mortgages. Is that correct?
Yeah.
All right, do you have that in writing?
Nothing in writing. When I hand them something, is considered as an acceptance. When you hand in notes that was assigned and it was collateral assignment and it was recorded to their name, if they wouldn't accept it, they wouldn't take it. They would just say no, thank you, and they would give it back, and then I would assign it to somebody else.
But just to expedite this, nothing in writing. Is that correct?
I'm sorry.
Nothing in writing. Is that correct?
Nothing what in writing was necessary. Just
not what's necessary or not. Just nothing in writing. You also indicated that as soon as they received the note or the mortgage, that they immediately took collection action on the same. Do you have anything in writing to show that?
The witness was here. He could have told you. He said they called me during 2009. The witness was here and he could testify to that.
2009?
Yes.
Okay. So that being the case, why did she sue you for cash? the proceeds of the sale of her property.
You want to know the answer why she sued me for cash? Because
Well,
she was, can I answer?
Yeah.
Because she was greedy. No, she just wanted to get more and more money. And needless to say, accidentally, I was at the courthouse last week, and I was planning to check the lawsuit that she filed. I saw 2 pages of lawsuit that she filed for the last few years, and she was a plaintiff. So maybe, I don't know, she likes to torture people, or she came to my office and I showed her the amounts, and she accepted that she took the 2 notes. And she definitely started collection action after that. To me, the value that my company paid was more than the value that she invested with me.
To you. Is that correct?
Correct.
Okay, so if there's a Los Angeles Superior Court lawsuit against you stemming from this particular transaction, the sales proceeds from the property were never returned to Mr. Rostami and the Rajtis, why did you not present this as a defense to the Los Angeles Superior Court action?
At the time that she filed that lawsuit, number one, I thought by giving those notes where it was satisfied, so it was necessary for me to defend. And number two, I didn't have, at that time, I didn't have resources to hire an attorney and defend myself, so nothing was defended. I didn't go to any court. If you look at it, I did not represent, it was represented, I didn't go to court at all.
Why not?
2 reasons. Number one, I didn't have resources to hire an attorney. Number two, I thought by giving her those 2 notes, she's satisfied, and it's already satisfaction of the payment to them. That was paid.
Well, let's talk about that. This note that was assigned with a face value of $2.1 million in 2009, you testified that the Rajtis were paid in full. Do you have any documents to show that?
Yes.
I objection. I think that misstates his testimony. He didn't state that. I want to go back to the record. I think his testimony was that he thought that they were substantially paid, and the witness was here who actually paid them. That would have been a better person to ask.
I did.
I don't think that was
I
his
did. He
testimony.
couldn't remember.
Oh, okay, let's just stick to question and answer. If he doesn't know the answer, then let's just move on to another question.
Okay, Judge Gass. That ends the cross. I have a statement here that I'd like to read and address testimony.
Can that wait for your presentation?
This is the presentation. I'm sorry, I am done with cross.
Okay, okay. So I'd like to go back to redirect if you'd like. Note we have about 10 minutes.
All right.
And then I'd like to go to the FTB's presentation.
I'll make it very brief.
Okay, thank you.
Okay. All right. Did Mike Rostami sue you?
Yes, he did, and he withdrew after he got paid.
Okay,
I'm
so
sorry, and he did what?
He withdrew the lawsuit
Okay.
after he got paid.
Thank you.
So the notes.
so it's my understanding that Mike Rostami was paid and he never pursued the litigation.
Correct.
And is Mike Rostami the brother of, brother-in-law of Manaz Rostami, or Ms. Rostami Rashti?
Actually, a brother.
The brother, it's her brother. Okay.
Correct, yes.
And the FTB has some paperwork regarding some bank. Did you ever file a bankruptcy yourself?
No.
Okay. So what? The only bankruptcy documents, I guess, that were presented involved your ex-wife. Is that correct?
Yes.
And you were not involved in that bankruptcy.
No.
No further questions.
Thank you. Panelists, any questions? Judge Day? Go ahead.
Mr. Boodaie, can you just recount a little bit or clarify what you did with the money that Ms. Rashti and Mr. Rostami gave to you in 2008? you said you invested it. How did you invest it?
I invested in notes. I was lending the money based on the value of the properties. As I said, I've been doing this for many years. So we would check the property, we would check the purchase price and the value, and then we give them up to 50 to 60% loan to value.
I see. Okay, and then did you have any meetings with your clients about locating or identifying a replacement property?
I called them a few times myself, and I told them, listen, the 45 days is getting very close. But I know this for sure because he asked me end of 2008 if they identified. End of 2008 was already too late. But within the 45 days, I can testify, I'm on the road, that definitely they did not identify the property.
Okay, and at the end of 45 days, then according to the agreement, they have the right to request for the proceeds back. But it looks like the assignments did not occur until 2009. Can you explain that, please?
Sure. As I said in my prior testimony, the fact is this, that most of the accommodators, you can check with them also, it's customary that after 45 days, they hold on to the money until the 180 days expires, and they would pay the client interest. So this is what I did, and right after 180 days, I met with them to see how they want to get paid. So after, if it's not consummated, then we hold on to money and we pay them interest up to 180 days, and then we ask them for the direction that they want to use their money.
Okay, and just to clarify, you, they did not ask for the money back after the 45 days, is that what you're saying? Because according to the agreement, they have the right to request the proceeds.
When
after the identification period, which would have been 45 days.
They can ask for the money if they identify within 45 days, and they can ask that I send the money to the replacement property.
No, after
That's for the replacement property.
I believe after the 45 days, they have the right to request the money back to them.
Not to them, to the escrow company that would give them the 1031 exchange or replacement property.
Okay, well then, did they ask for the money back after 45 days? At all?
No, as I said, the property was not identified. And then after 180 days, this is the time that we agreed that I paid them with the note.
Any more questions?
Go ahead.
So, Mr. Boodaie, so when was the first time that your clients indicated some that they wanted their money back, or that they were upset, either the money back from you or to be transferred to a new accommodator? When did that first happen?
Sending the money to the new accommodator didn't happen, as I said, because within 45 days they did not identify the property. But I don't remember officially when they asked me, but definitely after 180 days was the time that I asked them to come to my office and we meet to make sure that they get paid.
Okay, and I have some questions about the investments you made under the agreement. Were you investing for yourself or for your customers?
Very good point. This was a pool of money. You could not say. I had a lot of my own money in there also. a lot of my own money in that bank account that I was using for investment. Not all of them came from the investors. So at the end, it was pool of money. We could not identify it to see what part is going for what note. Because the bank account is sitting there and my money and other monies are sitting there, and I was use the money to lend and get loans.
So there's no segregation of funds?
No segregation.
So how did you decide how much they would be? You said that the clients would earn some money on these investments, that's what you said, but how do you decide how much they earned if you don't segregate their investments? I mean, some of your notes earned one interest rate and some would earn another, so how would you decide how much interest to pay them?
This would also answer the question of when I pay them the interest. Or the question they will ask also, do you let the client know that you are investing the money in that note or whatever?
Right.
Since I was the only decision maker on the company, on our century, all the money would come to the pool. The day that they give me the money, they would get the interest no matter what. It doesn't matter. I wouldn't assign them to any notes. I would just say, okay, you give me the money, I pay you the interest from day one. But I decide to see what places or what notes I can buy or to lend. So at the end of the day, if their money was sitting there for about a month or a couple of months, it's my loss that was sitting in a checking account and earning no interest, but I was paying them interest from day one anyway. So everything was under my obligation to pay them the interest and invest their money in different notes. And then I would make the spread. If I was giving them like 8% and I charge the client 10%, I would make that 2% spread for making the decision and being the broker in that deal.
Okay, thank you.
I hope I answered your question. So at the end, I would not go to, for example, XYZ, tell them, listen, I'm buying this note for you. This is not the way it would work. They would give me the money from day one, I would pay them interest, but I would invest it in different, and as you asked, definitely my money was involved in there also.
So you didn't pay them any interest during the first 180 days though, did you?
I did, yes. It's on their statement. I did pay them, yes.
Is that statement in evidence, do you know?
Do you have the statement?
I may have, let me see, he has he has an internal accounting record. I'm happy to, admit it.
I didn't see any.
I didn't, it may have been in the, might be in the unnumbered exhibits. If it's not, let me present it, I've got it here somewhere. Give me 1 second. It's your, let's take a look here. Let me go back to my original brief.
Mr. Weiss, I'd like to move on.
Yeah, here it is. It's in exhibit. Well, originally our exhibit G, it might be exhibit G. Our original exhibit G, I don't know, that's been numbered. Let's take a look. It's in there. There is a
Exhibit 8?
Well, our original G. Let me find it.
Right, which is Exhibit 8. That's
Yeah,
the
Exhibit
tax
8.
return?
The tax return is followed by there's an accounting that Mr. Boodaie has a internal accounting records that are in there.
Okay.
Is that it?
This is what it is. There is one for Microstami and one for Rashti. I know how to find it. This is that. It was in a different exhibit. I can look at that. I can find
Okay,
it.
why don't you come back to it on your closing if you'd like, but I'd like to move on to FTBs.
Judge Gast,
Yes.
I have a document here I could present to the court, it does show repayment of $8,000 to Dr. Rajdi for tax year 2008, and as I referenced in my objection, there was an accounting adjustment for that regarding the unreported income.
Okay,
So I could spread them out and we can move on. It'll be really quick.
sure, please. Thank you.
Thank you. Yeah, that's the same one.
Yes.
Matt?
Yes. Thank you.
Interest was paid. Interest was paid from 2009.
Was this exhibit introduced into the record?
No?
Maybe not, no.
Okay. FTB, would you like to introduce it into the record?
If it could assist in understanding that Dr. Rajdi was paid back a sum of about $8,000 in 2008, sure. I had this exhibit on standby because we have the money being received by All Century, the sales from the proceeds of which represents the sale of the property, the proceeds from the sale of the property in 2008. Nothing else was done until April of 2009, which here just reflects the assignment. So
Okay.
this is a mere accounting, a weedy issue that we just delved in when Judge Margolis asked this question.
Okay.
So the figure you're referring to in this exhibit is the 9/22/08 entry of $8,341. Is that what you're talking about? Return of escrow, excess funds for escrow?
Correct, and you also had a question regarding interest.
And where's the interest reflected here? I don't see it. I mean, I don't see any interest payments.
Was accounted.
If you look at, there's an entry for 10/31, 11/30, and 12/30. The description says interest for October, November, and December of 2008. There's also $783.
But, Mr. Boodaie, these numbers that he's referring to for 10/31, 11/30, and 12/31, that reflects interest that accrued, not that was paid, correct?
No, it was accounted for. At the end, they got paid.
It was accounted for, but it wasn't paid in 2008, I don't think. Otherwise, it would be in the credit column, I believe, right?
No. When it works for us different around because this is for us, not for the client. When, for example, I'm looking at Mahnaz Rashdi. When she paid $1,419,000, we put on the debit. It means I owe them the money, and then at the end, every month interest was accrued and added to their balance.
Okay.
Okay, so I think what I'll do is I'll admit this exhibit into evidence unless Mr. Weiss, you have an objection.
No objection.
Okay, so I'll admit this as FTB Exhibit V. Okay, any more questions, Judge Margolis?
No.
Okay, Mr. Hunter, you'll have 30 minutes.
Thank you, Judge Gast. May it please the panel. This case involves pass-through losses from an S corporation to its sole shareholder for the only tax year at issue, 2008. The law is clear. Internal Revenue Code Section 1366 provides that S corporation shareholders shall report their pro rata share of the S corporation's separately stated items of income, loss, deduction, and credit on their individual income tax return. The same goes for their pro rata share of non-separately stated items of income or loss. California law conforms to this federal law with Revenue and Taxation Code Section 17087.5, Section 23800, and Section 23802.5. In this case, the facts and evidence show that appellant was the president and 100% shareholder of All Century Incorporated during the tax year at issue. He testified as such under oath. Also, Exhibit B to respondent's opening brief, and Exhibit B in this case was a prior deposition testimony, and he confirmed this in his reply brief. It was all him. He controlled All Century. The facts and evidence show that All Century received $3.5 million from two clients, Mr. Rostami and the Rashtis collectively, that hired All Century to perform a Section 1031 exchange. The facts and evidence show that All Century failed to return $3.2 million of this money to these two clients during the tax year at issue, because we have pieces of paper, we have a note, we have a blanket mortgage. What we don't have is a bank statement or any proof that these victims received their money back, cash. All Century kept the money, and one of the clients, Dr. Rashti, has been suing to get her money back ever since. So as to the first issue, unreported income, respondent audited All Century's tax year 2008 return and correctly assessed additional California income tax due to this unreported income. And that's on the S corp, the franchise tax. After audit and protest and a failed attempt at an appeal before the Board of Equalization, this bill, this assessment against the S corporation, has gone final. The company was suspended and remains in suspended status to this day. Appellant, as 100% shareholder of All Century, failed to report this income on his individual tax return for tax year 2008. Again, the law is clear. He must report his pro rata share of income from the S corp. But in this case, the facts and evidence show that he failed to do so. He admits he's the sole owner of the company. He admits that he alone controls the company, and he failed to report this income on his individual income tax return. And really, that's where the analysis should end. And also, when speaking about the tax year that the Office of Tax Appeals has jurisdiction over in 2008, I went back and took a look. Both victims, Mr. Rastami and Dr. Rashti, reported theft losses for the year at issue 2008 on their personal income tax returns, the other side to this transaction. Revenue Procedure 2010-14 provides a method to report this loss for certain taxpayers who initiate deferred like-kind exchanges under Section 1031, but fail to complete the exchange because the qualified intermediary defaulted on its obligation to acquire and transfer replacement property to the taxpayer. The IRS knew that there was some abuse occurring, and they assisted taxpayers with this revenue procedure. Both the IRS and respondent allowed Dr. Rashti's theft loss in the amount of $1.4 million for tax year 2008. Both the IRS and respondent allowed Mr. Rastami's theft loss in the amount of $1.8 million for tax year 2008.
Are these in the, is this in the record, all these theft losses?
No, this is not, yeah, so you, essentially we would just, this is just argument, not testimony, unless you want to be sworn in. Because this is not in the record.
It's argument. I took a look at it, so it's argument.
Okay.
If you want to,
Okay, you can proceed, but we'll consider this as argument, not evidence.
Okay, I just
to be clear. But go ahead.
Okay. So these two amounts added up comprises the unreported income from All Century in the amount of $3.2 million. As to the second issue, rental real estate activity, Internal Revenue Code Section 469C2 provides that any rental activity is considered a passive activity regardless of the level by the taxpayer. Now, under federal law, certain real estate professionals are permitted to treat rental real estate activity losses as non-passive, but California law explicitly does not conform to this treatment at Revenue and Taxation Code Section 17561A. Therefore, for California tax purposes, rental real estate activities are passive activities, just like the activity reported on this K-1 from All Century to this taxpayer in the amount of $473,000. These activities are per se passive regardless of the taxpayer's level of participation. In this case, respondent correctly recharacterized appellant's reported flow-through losses in the amount of $473,000 as passive. First, he didn't show material participation in rental activities when documents and information were requested at the audit stage and at the protest stage. Also, there's a phase out when the taxpayer's federal modified adjusted gross income reaches over $150,000. Here, appellant's 2008 federal modified adjusted gross income was revised to $4.9 million after the all-century flow-through adjustments. His federal modified adjusted gross income was well over $150,000, and the $25,000 limitation is reduced to zero. So, if this panel finds for respondent on the first issue, the second issue goes away. As to the third issue, the accuracy-related penalty, it was mechanically and correctly applied in this case because appellant underreported his taxable income on his individual income tax return by greater than 10% of the tax required to be shown on the return, or $5,000 for tax year 2008. Appellant is an enrolled agent before the Internal Revenue Service, a real estate broker, a real estate agent, and he has not presented anything that even comes close to receiving advice from the tax professional to fail to report $3.2 million in income, both at the S corporation level and on the individual return. He makes no showing of reasonable cause as a defense to this penalty, no showing of substantial authority, and no showing of adequate disclosure, again, unreported income, and reasonable basis therefore. So the accuracy-related penalty was properly imposed in this case. Just to buttress something here, appellant testified in response to a question, what happened to the sales proceeds when the property was sold and they were looking for a replacement property. He testified, you could not separate the money. It went into a pool of money. I had a lot of my money in there also, speaking in the voice of an appellant. Commingling of funds is not allowed. It's almost like a client trust account for an attorney. It's not his money. It was Dr. Roshti's property and her brother's property, which was sold, and that property should be on account, ready when they request the money back if no replacement property is purchased, and that did not happen here. And in response to that, the California legislature even passed a law in 2008, and it's in the financial code, section 51000 through 51013. And reference was made in this exchange agreement that the intermediary can invest the funds. Well, that's supposed to safeguard the client's money. The intermediary is held to a standard of care as a prudent investor, and they violate that standard of care when the exchange funds are knowingly commingled by the facilitator with the operating accounts of the facilitator or his personal funds. Also, section 51011 says that a person engaged in the business of being a qualified intermediary shall not do the following: make any material misrepresentations concerning any like-kind exchange transaction, commit any fraud, crime involving fraud or misrepresentation, misappropriation of funds, materially fail to fulfill its contractual duties to a client to deliver property or funds to the client. A person who violates this division is subject to civil suit in a court of competent jurisdiction. This creates a private right of action for a taxpayer or a client that enlists the services of a qualified intermediary and does not receive their money back.
What were you reading from again?
I'm reading from California Financial Code section 51011, 51013. So, in other words, you had qualified intermediaries performing 1031 exchanges, and the market was going bad, and some intermediaries could not provide the client their money back upon request. The California legislature responded. She sued him. She obtained a default judgment. She's still trying to collect, no matter what this exchange agreement says, on appellant's or All Century's unfettered right to invest her funds whichever way it saw fit. So I think that's very important here when the evidence and testimony showed that the funds were commingled. At the audit level, information was requested to attempt to trace the funds inside of All Century Incorporated, and no documents were provided. With that, respondent's action must be sustained.
Thank you. Mr. Weiss, you will have 30 minutes for your closing.
Okay. Well, let me start off by saying, I don't believe the financial code section 51011 to 51013 was in, I don't think it was in the briefs. So at a minimum, we'd like an opportunity to look at that and respond, because he's bringing up items that they had plenty of time to put in the brief, and now they're bringing it up, and any due process would allow us to respond to that, because off the top of my head, I'm not aware of those sections, and I'm not disputing what Mr. Hunter says. I just like an opportunity to look at it after at least some time period.
And as I told Mr. Hunter, we will consider what he said about the theft and all that for Dr. Rosti as argument and not evidence. So it's not in the record, so it's not evidence.
Okay, all right. And then, so I was going to say the same would apply to the theft loss. I mean, I was expecting Dr. Rosti to be here, but obviously she's not here. And if I would have known, maybe I would have subpoenaed her myself, because they listed her as a witness. She's not here, and I don't know why she's not here, but it is what it is. So let's go further. I think Mr. Boodaie, to be Mr. Boodaie's conduct, was not perfect. However, there's a lot of offsets, and he's entitled to offsets and basis for what he gave, what he paid and what he gave back. Initially, they accepted there's no evidence to refute that they did not accept these documents. In fact, the evidence on the contrary from Mr. Darvish said that they were paid off, at least somewhere around $2,100,000. I don't know exactly how much was paid off on the Laughlin property, but Mr. Boodaie paid $2.6 million in a very short time period. And with respect to, this is a little bit different. The tax year, as an accommodator, you got to look at it this way, almost like the taxpayer. The way it works is, even though you receive money in one year, say late 2008, most accommodators do not return the money after the 180 days. That's pretty much the practice in the community, and they earn interest, and they were credited with interest, and they were given money back. But so the point is, at the earliest, Mr. Boodaie could not have returned the money until around March 2009. So it's really part of one transaction. So he did give funds. I mean, there is wire funds, unrefuted, that he paid for this, and I think he should be entitled to an offset or some sort of basis to offset that amount of money. And that has not been refuted. We have a witness here that testified that it was paid. I think with respect to the litigation, Dr. Rashti's not here to verify the litigation. I don't know why she continued with the lawsuit. She probably was mad at him. But the point is, she was paid, she settled with the accountant, and also she received these items, and honestly, I don't know why she continued on. The testimony of Mr. Boodaie, I didn't have a lawyer, I didn't want to deal with it. We didn't get into this. Boodaie had a lot of problems at the time, and it went to default. And I think that, there's no evidence that she wasn't paid in full. She pursued a lawsuit, and really, his lack of participation, and try to explain, and I think that should not be considered, because she did receive funds. With respect, so it's a little bit different. If this was a normal transaction that could close by 12/31/2008, I could accept you know, the franchise tax board's position, but as you know, when you, let's say, Mr. Rostami and Roshki would have went and bought an exchange property in 2009. They would have had to report that on the 2008 return. So I think it's really all part of one transaction. You report the sale, or the 1031 exchange, you report it on your 2008 return, even though the property wasn't bought until 2009. You know, if it's bought within the 180 days, identified within the 45 days, and closed within the 180 days. So I think that's a very important factor that's been overlooked, because it's really one transaction, and it's really still open. And I think that he, you know, he gave value, notes. Yes, probably, you know, maybe there would have been a better way for him to do that. But he did give them money. You know, it's unusual that a brother and a sister, Dr. Rostami, didn't pursue the litigation. He didn't go to a judgment. He withdrew. You know, from the same assumptions they're making, that means he was satisfied. And he put up more money than she did. I believe he put up close to $2 million, and she put up, I believe, about $1.2 million. So the fact that he withdrew, if you want to go that way, then that's an assumption. He was paid. So I would take that position. Let's see what else. I think that would be, with respect to the penalties, let me get to that issue, but let me get to the second issue, the $25,000 passive loss deduction. I agree with the Franchise Tax Board. Unfortunately, the state of California does not have a real estate professional category, and if there was a real estate professional category, it would be deductible. But it is limited, and his income, unless, you know, if the three of you decide for us, that issue goes away, because the losses would more than offset that, and you would get that. But I agree, the state of the law is that California is limited into carryover. So whatever's there, I guess, would be a carryover. It would be a passive loss carryover, and it would be used at the time there's an ultimate disposition of the property. I don't know the RT section, but it's 469 in the Internal Revenue Code. Okay. So going on, the penalties. I believe Mr. Boodaie acted in good faith. He believed in his mind that he had satisfied the obligation. He did not, they accepted, there's no evidence to the contrary, but Dr. Rashti, I guess she's a dentist, Dr. Rashti and her husband and Dr. Rostami accepted the assignments. So in his mind, he believed he satisfied it. In his mind, he believed Section 5.1 of the exchange agreement allowed him to have other investments. In his mind, he paid a lot more than what he gave them. So I don't think there should be any penalty. I mean, I think he acted in good faith, and I think that he, you know, he wasn't reckless. He didn't have to, listen, the penalty should be sustained if he didn't give them back a dime. But he gave them back all that, and he tried to make it right. Yeah, he had problems. Yes, yes, he had health issues, and those are issues that should be taken into consideration in any penalty. If you have problems, clearly, marital problems, health issues are a factor in an accuracy-related penalty, irrespective of the fact that he's an enrolled agent. When you have problems will evolve. Everybody goes through those. So I think that's really the extent of my argument. I want to thank you, gentlemen, for listening. And other than the issue of the financial, if that's not going to be evidence, then I would, if whatever's going to happen, I'd at least like an opportunity to look at that and respond. If you guys want, otherwise, if it's excluded, it's excluded. We won't have to deal with it.
Thank you. I'm going to go to my panelists. Any final questions? Judge Margolis?
No.
Okay. Judge Tay?
Maybe just one quick question for Franchise Tax Board. Is there any authority to show that shareholder of an S corp cannot challenge a partnership level adjustment? Or I'm sorry, an S corp level adjustment?
No, it becomes a substantiation issue, Judge Tate. So it's akin to an an S corporation shareholder receiving an inaccurate K-1. Let's say the K-1 reflects income that passes through to the individual shareholder of $1 million. And the shareholder takes the position that that's incorrect. My pro rata share of income is only $500,000. Well, then the individual shareholder is obliged to self-report an income of $500,000, clearly mark on the tax return why that taxpayer is doing so, and substantiate their tax reporting position at the individual level. In this case, it's exactly what appellant is attempting to do, because the S corporation liability, both for franchise tax purposes and the unreported income, has gone final, with the same documents being presented at the appeal level and at protest. This is the, not the other side of the coin, but the natural consequence of this unreported income at the individual level. It flows through. The S corp return is merely a reporting return. The assessment occurs at the individual level, and that's what we're discussing today. So it's not a second bite at the apple, it's substantiation from the standpoint of the individual taxpayer. And I would also like to...
So in other words, he's not barred by contesting it here, is what you're now saying. Just because he didn't contest it at the corporate level, he can still contest it at the pass-through level.
Well, he had every opportunity to contest it at the S corp level, but
he's not barred if he didn't do it, though.
I'm not saying he's barred. My statement is, when that judgment has been, that assessment has gone final in terms of the S corporation unreported income that flows through to him. That's the procedural status of the S corp determination. And we are here today discussing appellant's position why, to sum it up, in this case, that the victims, or Dr. Rashdi and Mr. Rastami, did receive a portion of their money back in the later year, but I would like to posit on this panel, both the S corporation tax return and the individual tax return have a box check. They report on the cash basis method of accounting. There's no accrual here, there's no offset. We're within the confines of tax year 2008. If there was a deduction by All Century for return of the money in a later year, that's on a separate return. There's no appeal filed for 2009, 2010, any year up until the present. One last point, if I could.
Yeah, go ahead.
Asking me. So, a statement was made, why, again, just speculation, why would Mr. Rastami drop his lawsuit if he wasn't fully paid? Well, again, for argument's sake, a victim could have taken a theft loss, but the way it works on the Internal Revenue Code, which California law conforms to, if you take a deduction for theft loss in year A, but you are compensated for that loss in year B, C, or D, you recognize that compensation as income in year D. You can't take the loss without reconciling that. However, that will be tax treatment for these individuals when the time occurs. We're focused on 2008 here. I just wanted to address that, how that operates.
Okay, thank you. All right, I think with that concludes the hearing. The judge, sorry?
I apologize. Can I say the last word also myself?
Yes, go ahead.
So, do you want to say something?
Yeah, I was going to respond. I think that, I think it's all open. I think it's akin to, if the year's open, the year's open. I don't know if the assessment's final. I think that everything related to this assessment, the flow through, I'm not sure the franchise tax board put on a 90-day letter in tax court. It's open. You can bring in mitigating stuff. So I'm not aware of that law, number one. Number two, I think that the judges have to consider the 1031, and it's really one transaction open until the 180 days are closed, and that's why I think everything should be considered back to 2008, much like the reporting requirement. Granted, I can't give you a cite off the top of my head, but I mean, I know there's federal law about mitigation in items open. I just don't have it on the top of my head. But clearly, the transaction is open, and if it was, if he handed back the money in the next year, it's the same as if he gave the notes instead. So I think that's the way you gentlemen should consider it from our perspective, Mr. Boodaie. I think quick, these guys are pretty good.
Thank you for your patience. Your honors, I will make it very short. There are three items. Number one is that if you take a look at my tax return, whenever I receive the money, I call it the cost, the gross income to me, and whenever I paid it, it was my cost. So at the end of the day, the very quick example is like this. If a person is buying something from me that I paid $2,000 for it, and this person is giving me $1,000, to me, accounting-wise, I lost $1,000. So to this lady and her husband, Mrs. Rashdi and the Dr. Rostami, the money that was, hard cash that was paid from my corporation was in excess of what they invested with me. So as an accounting-wise, very simple. They gave me something and I gave them something back. Difference is my loss. I don't know how I made money. I've been doing accounting also for many years, but my main practice before was real estate. When they paid me $3 million and I gave them over $4.7 million back, hard money that came from me, this is a loss to me. Or my accounting that I learned in New York is the garbage. I'm sorry to say that, but to me, I lost $1,007,000. Question number two, item number two, he said about the laws in 2008. The laws was enacted after the real estate debacle. I'm talking about the 1031 exchange laws. Before those days, 2004 or 5 that I started this business, you did not even need to have any license to be a broker. You could be an accommodator. Any person, even a person that didn't have a high school diploma, could have an intermediary. The law that he's talking is after the fact that after these things happened and the state of California changed the law. At the end, to me, I wanted to end it like this, that I don't want to brag about it to say that how much I had a big net worth of assets or wealth, and all of them were lost. My own money were lost also. I don't know how I made money if I lost all of my money. The house that I owned, that I don't want to brag about it, that how much it was. I'm living in a 1-bedroom. How did I make $3 million that he's claiming? I lost every single money that I made for the last 4 years here in California. How could I make money with what he's claiming? At the end, Your Honors, if you look at the hard-earned money that went from you, 4.7 to them, in lieu of the $3 million, accounting-wise, I lost $1,007,000. Thank you, Your Honors. That's what I want to say.
All right, thank you very much. This concludes the hearing. The judges will meet and decide the case based on the documents and testimony presented and admitted as evidence. And we will aim to send the parties our written decision no later than 100 days from today. And now the case is now submitted. The record is closed. Thank you.
Thank you, gentlemen. Thank you. I appreciate it. Thank you.
Thank you, sir.
1801-2026. It is 1:04 p.m.
Good afternoon. Welcome to Office of Tax Appeals. Thank you for your patience, and looks like we're not having mics today, so just a reminder to speak loud. So this is an informal hearing, but we will be recorded with a stenographer today. So a couple ground rules to remember: speak clearly, speak loudly, and speak slowly. And also, please don't speak over each other, and make sure to make verbal responses to questions. So don't just nod your head. We actually need a yes or a no answer. My name is Daniel Cho. I'm the lead administrative law judge for this hearing. But with me are administrative law judges Linda Chang and Lynn Dang.
Good afternoon.
We are all co-equal decision makers in this opinion, but I'll be the one that kind of guides and proceeds and helps us along with the process. With respect to the evidence in this case, CDTFA has provided exhibits A through C. Appellant, we have not received any objections. Is that still the case?
Yes, I only objected to the last documents they provided, there were some statements that were incorrect, and I provided exhibit, I believe,
5.
5 on my
I
end.
think that was 5, yes. Since you weren't really objecting to the evidence, you're just providing other evidence to support your position. Okay, then we'll go on the record shortly and we'll be admitting A through C into the record. Appellant, you have provided exhibits 1 through 5, and CDTFA has not objected. Is that still the case?
That's correct, no objection.
Okay, then we'll be admitting appellant's exhibits 1 through 5 on the record as well in a little bit. The issue in this case is whether adjustments are warranted to the determined measure of tax. Is that still at your understanding, Mr. Khraich?
Yes.
Department?
That's correct.
Okay. It looks like we're all on the same page. Any questions before we go on the record? Mr. Khraich? Department?
None.
Okay. Then let's go on the record. This is the appeal of Richard Khraich, OTA case number 18012026. Today is December 18th, 2019. The time is approximately 1:06 p.m. We're holding this hearing in Cerritos, California. My name is Daniel Cho. I'm the lead administrative law judge in this hearing. With me are administrative law judges Linda Chang and Lynn Dane. Can the parties please introduce and identify yourself for the record, beginning with the appellant?
Richard Khraich, R-I-C-H-A-R-D, K-H-R-A-I-C-H.
Thank you. Department?
My name is Scott Lambert. I'm representing the California Department of Tax and Fee Administration. To my left is Lisa Renati, and to her left is Dana Flanagan Macbeth.
Thank you. The issue in this appeal is whether adjustments are warranted to the determined measure of tax. With respect to the evidentiary record, CDTFA has provided exhibits A through C. Appellant did not object to these exhibits, therefore we'll be admitting these exhibits into the evidentiary record. Appellant has submitted exhibits 1 through 5. CDTFA has not objected to these exhibits, and therefore we will be admitting these exhibits into the evidentiary record as well. Mr. Khraich, originally we gave you 30 minutes to provide your presentation because you have witnesses, but it looks like there are no witnesses at this point in time. Would 15 minutes be okay for you?
Yes.
Great. Then if you don't mind, would you stand and I'll put you on the oath? Please raise your right hand. Do you solemnly swear or affirm that the testimony you're about to give will be the truth, the whole truth, and nothing but the truth?
I do.
Thank you. Have a seat.
Can I take my jacket off?
Sure.
I ate downstairs and it smells like fried foods. The whole cafeteria. Sorry.
No problem. All right, thank you very much. So when you're ready, please begin.
Okay, I've kind of prepared a statement, but I also have a description of my business and why these deductions should be warranted. So I will start with my statement to basically explain how we got to this point and also explain how my business operated to justify why I'm disputing the tax amount that I'm being asked for. Thank you for allowing me to appear here today. It's a day that I've been actually waiting for a long time. My business closed a long time ago, and it seems like this has been a nightmare that's been haunting me ever since, so I really appreciate being heard today. I'd like to start the chain of events as I recall them and state some facts during those events. When I received the audit notice from Mr. Medina, I made sure that all my files for the period requested were available and labeled by month and year sold. I also gave Mr. Medina access to my computer at work to access any information he needed, as all sales were saved on a software that was being used at the time to process automotive sales. During Mr. Medina's time at my office, I was always available and answered any questions he had. Also during his visit, he was given access to all voided reports of sale, known as RS, due to sale cancellations and buyback deals. The buyback deals were due to first payment default or down payment reversal. After some time had lapsed, I received a call from Mr. Medina stating that my ledger of sales made and the filings were inconsistent. At that time, I made it clear to Mr. Medina that I was filing the completed sales only and omitting any canceled or repurchased sales from my filings due to first payment default or down payment reversal. I urged Mr. Medina to return to my office and take accurate account of those sales. At the time, Mr. Medina stated that he will be out of the office for a period of time because he was getting married and will get in touch with me when he returns to work. The following call I got from Mr. Medina was that he has been promoted or reassigned, I do not recall at this time, to a different division and will not be completing my audit. More and more time had lapsed, and I received a visit from two gentlemen, one of whom was Mr. Flores, at a location I had provided after I shut down my business. I was told my audit had been completed using data received from the DMV, and I was responsible for the difference. I was shocked and frustrated as the location I was being visited at, I was being evicted out of. I had lost my home of 8 years, my business has been closed, and I was using that location as a last resort to liquidate any vehicles or anything that I had prior to closing down the rest of my business. The records at that time were stored at that location, which I explained to Mr. Flores that everything was boxed up and stored with furniture and computers and everything that was removed from the retail location that I had once rented and operated out of. At the time, I was given an unrealistic period of time to produce records in an organized manner. I do not blame the Franchise Tax Board for where I was in my life or how organized I was at the time. I got myself there by following a failing business model, and I drained my savings and drowned in debt over a short period of time. My argument from day one was they used general data from the DMV to conclude my audit because no one wanted to do the actual work. And when I was given a chance to reconcile, I was given days when I was scrambling to keep my family out of the street. Every time a report of sale is used, as a dealer, I have 5 business days to report that to the DMV. Once a sale is concluded and fees are posted, the title, the registration transfers ownership. But every report of sale that I initiate has to be reported within 5 days. Otherwise, a penalty will be imposed on the sale. The sales that were canceled and never completed require the dealer to maintain a list of canceled RSs, physical RSs. RS stands for report of sale, in their place of business. So if the DMV was to audit their ledger, they're able to account for those canceled report of sales. Now, I'd like to stop and emphasize a little bit on the way my business operated and the type of lenders that I used to operate my business. I was able to locate a contract for one of the lenders I used, which I submitted as exhibit number 4. And in that contract, it clearly states that as a dealer, I will be obligated to purchase back any contract if the buyer does not post their first payment or if their down payment doesn't clear my bank account. And that was the case for the other lenders that I used at the time. I was operating as a small used car dealer in a market where the only clients that visited my location were clients seeking credit that wasn't provided at your typical car dealer. So the only lenders that we can use for that particular borrower put a stipulation on the owner of the business as a sole proprietor. So I had the responsibility of repurchasing those contracts. Now, my understanding of how a California used car dealer operated and was responsible to post sales tax was on completed sales. And at any given time, if we are to buy back a contract or have a repurchase, that sales tax wouldn't be due. However, any DM fees posted to the DMV would carry on with the title of the vehicle. In other words, I wasn't able to apply for a refund from the DMV. So that's how I operated and posted fees at my dealership. Now, in regards to the reports of sale, every dealer is giving a numeric sequence of report of sales, and that's how the DMV keeps records of which vehicles my dealership sold. And that's the report that the Franchise Tax Board used to compile a list of the vehicles that I actually sold, got paid for, and needed to pay sales tax on, but that's not the case here. The case here is that that report is just to account for every report of sale issued to me from the DMV. And I had to, anytime I used one, whether it was a sale that was concluded or not, I had to report that within 5 days so they can add it into their system. Now, why would I use a report of sale and not conclude a sale? The lenders at the time were only funding a contract if provided with a registration showing them as lien holder. In other words, I could not initiate a contract and get paid on it until that vehicle was registered. So I would go and register that said vehicle before, in some cases, before I even gave delivery to the person, just to secure funds, and then ask them to come and pick up the vehicle once the lender has approved their application and funded that deal. And in some cases, those were canceled because the lender either found fraud or found that the applicant doesn't make the money they stated on their application, whatever the case might be. Now, on the repurchases, those typically happen on the first payment that the borrower made, or if I received a bounce check on a down payment, I had to report it to them that that contract was invalid because the down payment bounced. So I was then asked to repurchase the contract by form of ACH. So if I had money coming from them, they would take back the funds for the contract that they were making me repurchase. So there was no, in most cases, there were no actual check that I've written. So I supplied the one or two that I had access to as part of the evidence that I provided. But a lot of times it was pretty much like a reconciliation of one sale with the other. And those repurchases happened because the vehicles themselves had left my lot. So on anything that was canceled, it was canceled prior to the delivery. Anything that was repurchased was after the delivery. Person had already had the vehicle, and I was asked to buy back that contract. Now, in most of these cases, we never recovered the vehicle because we would hire a repo company, which I've submitted documentation on a sample of a repossession order that we gave, and the company didn't guarantee actually finding that vehicle. In a lot of cases, the address that was given on the application was incorrect, or the phone number that was given on the application was disconnected. So in a lot of cases, we never recovered the asset or the product that we actually sold. And I had to go and pay back money that I was funded on that contract. My frustration from day one and my plea from day one was for the Franchise Tax Board to audit my actual files that I've made available at the time, that I had resources to hire accountants to work on them with the auditor. I had resources to do a lot of things, but their decision to conclude their audit came at a time when my business had already been closed, and I was in no financial position to fight it or dispute it or do anything about it. And we're talking almost 2 years. We're not talking from the first time I pleaded with Mr. Medina to come back to my business was in 2013, and in 2015 is when I was told that my audit was final and this was my responsibility. And I believe when I met with Mr. Flores at the Franchise Tax Board office in Riverside that I visited after being frustrated from not getting any clear answer on what's going on, I was told that I had better luck just filing an appeal than going back and redoing my audit from scratch. Well, I later realized that that was better luck for the person that was working on the audit, not necessarily better luck for me. And here we are today. So I hope that I gave a brief explanation on events and the nature of my business and why I feel that actual credits were never warranted.
Okay, thank you very much.
Thank you.
CDTFA, do you have any questions for the witness?
We do not.
Panel members, do you have any questions? Judge Chang?
No questions.
Just a brief question for Mr. Khraich. I noticed you referred to the Franchise Tax Board during your presentation multiple times. I believe you are actually referring to the California Department of Tax and Fee
The
Administration?
Board of Equalization.
Board of Equalization,
I'm
okay.
sorry. Yeah,
No
I
need
kept
for
seeing
apology.
FTB on the documents that I was receiving, and that's why
Okay.
I apologize.
Also, one follow-up question for you. It appears a large portion of the audit was computed from your differences between your own recorded sales, not from the DMV records?
Correct. So we're supposed to carry what's called a ledger. DMV requires us to carry a ledger to again document any report of sale that's being used. So the ledger that I had in my office, I made available to Mr. Medina when he visited my office, and that's what I'm assuming he used to come up with those figures.
Okay, and you're saying there's inaccuracies in those records, or that he did not investigate them thoroughly?
So basically, the ledger describes any sale that we initiate. Every sale that's concluded had a file in my office with an executed contract, a completed registration, a copy of the title showing that the vehicle was transferred to the buyer, and has the lien holder as I can't think of the word now, but usually on the bottom right of the title of a vehicle, there's a section for the lien holder. So every one of my files had the original application, the executed contract, the funding figures, basically the closing figures that I got from funding that contract, a copy of the title showing that the buyer did get their name on title and the lien holder. So that's what we call a completed sale, a funded closed sale. So I had those available for him, and then of those closed funded sales, I had a separate section that had the repurchases.
They were not recorded on this ledger?
Correct. So everything was recorded on the ledger.
But not, if there was a buyback, it was not recorded on that same ledger?
The buybacks were not included in my filings.
Okay.
And any canceled RS, any RS that was initiated that never led to a sale was never included. It was included on my ledger because I have to keep account of any report of sale I use, but it wasn't filed as a tax sale.
And you're no longer able to produce the buyback records?
Correct. So,
okay.
And we can thank the City of Riverside for that. I have two files, two cases with the City of Riverside, one from December of 2012 for my mechanic shop being robbed, and then one that I provided the file number and the title of the actual, once I moved out of the City of Riverside completely, I knew I was going to need those records and those computers at one point, so I had ownership. My dealership at the time that I owned it owned a trailer that you pull behind a car, a box trailer. So I put everything in it and I placed it in front of my parents' house in Riverside. And a couple of years, about a year after it was sitting in front of their house, or a year and a half, it was stolen with everything in it. And I provided a police report number and a copy of the title of the actual vessel that I owned that I was storing everything in.
Okay, thank you so much.
Just a quick question from me then. Is there any other way to obtain evidence of the buybacks? For example, did you use a business account which you still have access to? Because those are probably online records of some sort.
So my business account was with Bank of America, and it was closed somewhere around the time of December of 2014 when I filed my bankruptcy. My account was overdrawn and I couldn't maintain it, and I don't know if they will allow me to get records from that far back, but a lot of these repurchases were reconciled with in other words, they were reconciled with other fundings. So if I had $10,000 coming in from Westlake Financial, for example, which is a company I was using to fund loans, and I had a repurchase for $7,000, they actually reconciled it on that invoice. And that invoice was placed in the file that closed, showing that the funds received from that sale were short because of this buyback, for example. Everything everything was reconciled in every sale. Now, in the events that I actually wrote a check back to the lender for that buyback, that would have appeared on my bank statement, which I provided a sample check that I retrieved from a file when I was dealing, I believe shortly after, I can't recall now if it was 2015 or 2016, I was dealing with a person via email that asked me for proof of a few files that were purchased back, and I was able to retrieve those documents and email them. And then when I got to this point, I went back to archived emails and printed those copies again to present them. Otherwise, I wouldn't even had those copies.
Did you try going to the credit unions that you used to ask for their copy of the transaction?
I have not made an attempt. My only attempt was to go back to my account executive with one of the lenders that I had a personal relationship with at the time. He visited my home and visited my dealership often, and because of lack of contact, his personal phone number is disconnected, and I tried to reach him at the company by sending him emails. They got rejected, and I tried to call the company, and it doesn't work for them anymore. So my only attempt is to call somebody in their business office to provide records. I dealt with 4 banks at the time, so I would have to make an attempt to call every single one of those and see if they can provide me of any records of my buybacks.
Okay, thank you. Those are all the questions that I had. So why don't we move on to CDTFA? Are you ready to do your presentation?
Yes.
Please begin when you're ready.
In this particular case, the taxpayer operated a used car dealership, actually 2 locations, one in Riverside, one in San Bernardino. The records that they provided, they did not have a sales journal, which we would typically see for this type of business. They did have a record of sales for a period of time for both locations. So what we did was obtain information from the Department of Motor Vehicles. They can provide us with the report of sale information. Basically, when the dealer fills out the report of sale, they submit it to the DMV. DMV maintains that information by dealer number. We're able to take the license fee, and based on that, we can determine what the selling price of the vehicle is, and that's what we did in this case. We obtained the information from the Department of Motor Vehicles and essentially compared it to what was reported and came up with a difference. The audit working papers were provided to the appellant. He did express disagreement at that time that there were various things which would be unwinds, and basically an unwind is when you make a sale but there's no title or possession that transfers, and you just basically undo the paperwork. There's no transaction there. That's what we're not talking about here, because the information that we used was the Department of Motor Vehicle report of sale information. So unwinds should not be an issue in this audit. There's also what's called rollbacks. So you would fill out the paperwork, but the vehicle comes back before the DMV processes or transfers title to that. And I don't believe that to be an issue. There's also what's called repossession. And that's a possibility in this case. The one contract that's been provided here is what the appellant said. In this particular case, which is if the buyer does not pay either the down payment or make the first payment, the dealer can be responsible for that contract, and so they would have to essentially pay back the money to the loan company. So it becomes difficult when you have repossessions, because there's a formula that you have to calculate. There's certain things that you need to know, and without that information, it's difficult to decide what the bad debt allowance would be on any particular transaction. And what I would point out is that the taxpayer didn't file any bad debt claims on their income tax returns, nor did they claim it on their sales and use tax returns. So I notice in the appellant's Exhibit B, the sales contract, if you look, and I'm going to say it's B3, which is the second page of the sales contract. If you look down on the left-hand side down to item G, which is cash, it shows that the customer paid $3,500. I'm assuming that's cash. Generally, if there was a check that was written, it will be in column or item F, other, and would show the check that's being received. But in this particular case, there'd be $3,500 that the customer's paying in cash. So even if you had a repo, you would have to take that into account, and then also the value if you got the vehicle back, you would have to take the value of that into account. And all of these things are unknown at this particular time. So when they did the audit, it was completed in March of 2015. It went through the review process, which at that time, the district principal auditor would contact the appellant. And so they did contact him. He said he had additional information that he wanted to provide. The auditor then met in person with the appellant on May 11th, 2015, which is documented in a memo to the district principal auditor on May 20th of 2015. And this is in the department's Exhibit 71. And at that time, the appellant did not bring any additional records with him in order to show that what value for bad debts, rollbacks, etc., would be allowable. So the audit went further to the appeals process, which is to our appeals bureau. So basically, the department has no information at this time in order to make any additional adjustments for bad debts, rollbacks, or well, those would be the two items. There is no information in our possession to make that adjustment. So I'm available for questions.
Thank you. Panel members, do you have any questions? Judge Chang?
No questions?
No questions.
I don't have any questions either. Then in that case, appellant, you have 5 minutes on rebuttal.
Okay, great, thank you. So going back to, I'm sorry, what was your last name? Okay, well, Mr. Lambert just stated, in regards to, in one statement, he mentioned the unwind process, and that an RS will be used for, but wouldn't have been used in the calculation because it's an unwind and would have not popped up on that report they got from the DMV. If I write an RS on December 1st, I have until December 5th to actually mail a clip of that report of sale to the DMV to record that sale in their system. Now, whether it gets completed, registered, fees paid on it, anything done at that time would be concluded, because what that does is starts a timer for the transaction. So I have to post fees within 30 days of the date of that report of sale, and I have to conclude the transaction completely within a certain date of that arrest date. So I have to file those reports of sale with the DMV within 5 business days so they can start the clock off. So in regards to his statement that an unwind wouldn't have been on this report, I disagree with that. If that report of sale was sent off within 5 days and the unwind happened after the 5 days, that unwind would have been on that report they got from the DMV. Transfer title did not happen before rollback. As I explained earlier, the nature of our business, we were at the mercy of these lenders to provide credit for people that couldn't get credit elsewhere. And their stipulation for us was to provide a copy of a registration showing them as lien holder before this loan could be even funded. So a rollback in this case happened after a transfer was completed at the DMV. Otherwise, I wouldn't have been able to get to the rollback situation. And the same goes for a buyback. All these transactions had to be completed at the DMV in order for the lender to issue payment, decline to issue payment, or force me to repurchase them if the first payment is not made. Formula to calculate, I'm going back to notes that I took here, so just allow me 1 second. If I recall Mr. Lambert's statement that the auditor didn't have a formula to calculate the amount that I would have been credited based on that buyback. And I agree with him 100%. He wouldn't have the formula, because had Mr. Medina came back to my dealership at the first time he stated that they had inconsistencies, or even reassigned that audit to somebody else prior to March of 2015, when my business had already been closed and I was in no financial position to reopen all my files and provide everything that they needed, that they gave me days to do. So had they not waited 2 years, close to 2 years, to act on my original request of saying, hey, you guys got it all wrong, come back and recalculate these correctly, because I have my files, I have all my documents in place, I have the time to do it and the resources. Nobody showed up then. They decided to conclude the audit as it became handed from one person to another, and then more convenient to just close it out and send that client to an appeal process. So you're right. They didn't have a formula in March of 2015, but they had the formula available for a long period of time before that. In regards to item G on a contract, which states cash received or cash, I don't know what contracts look like today, but at least for the years that I operated as a car dealer, any form of down payment came in the form of cash on the contract. In other words, whether the borrower gave us a check, cashier's check, or cash, it fell under cash on the contract. Other was stipulated for any deferred payments. So if the borrower was providing a payment on buying the car on December 1st and giving a payment on December 10th, it went under other. But anytime we received a payment, at least that's how I operated my business. It all went under the item cash, because there was no section for check or cashier's check or any other form of payment. May 11th of 2015, as I stated in my letter that I sent in with exhibit number 6, was a visit initiated by myself to the office in Riverside to basically try to salvage this audit from getting to a point that I couldn't come back from. I had a phone conversation with Mr. Flores on March 3rd. I provided the email that he sent me confirming that phone call, and also telling me that he will be following up with me after that. When I didn't receive a call back, as I have been concerned with this audit from day one and from Mr. Medina's early statements, I went back to the office, and at that time I was, I don't want to say persuaded, but I was somewhat told that my only option at that point is to pursue an appeal and not to go back and invest the time and the money and take the time or be allowed the time to revisit all my files that I still had access to at the time. Because I could guarantee you at that particular time, I did not have or think that I would have in 10 or 15 years $175,000 to my name to pay back on a business that already wiped me out. So I was prepared to do whatever they wanted to ask me to do at that time to provide them with any documentation to get this reconciled. So that's the 5/11 visit that was mentioned by Mr. Lambert. No information at this time available? Of course, there's no information at this time available besides archived emails and things that I keep going back to. But that's not my fault. That's not my doing. That's not my creation. Because if you go back to any documents associated with this audit or any phone conversations or any emails, everybody that's worked on this audit will agree that I've been very prompt in responding, very prompt in providing information, very prompt in actually being the one initiating a sense of urgency. So the fact that there's no information for them available today to do it right is not my doing. And I don't have anything else to say about Mr. Lambert's statements. So I took notes of everything he said, and I just wanted to be clear of where I stand on those statements.
Thank you very much.
Thank you.
So before we adjourn this hearing, let me just ask one more time. Any final questions, Judge Shane?
Yes, for Mr. Khraich. You said that the fact that the department has no records to go on is not your fault, but did you not claim that the records in the trailer were stolen and that's why no information is available?
The reason I'm making that statement is because my plea from day one was to revisit my business as it was in operation and re-audit my files correctly. But due to Mr. Medina's wedding and then promotion and then the person that took over the audit not contacting me until March of 2015, all the things that happened during that period, that's what I'm referring to. That if you want to refer to the physical answer, the act that prevents us today from doing that, the simple act was, yes, me losing my records by them being stolen from a trailer.
Okay, thank you.
Any final questions, Judge Shane?
No questions.
Okay. I don't have any final questions either. So this will conclude the hearing. The panel will meet and confer and discuss the case based on the documents and the testimony that was presented today. We will issue a written decision no later than 100 days from today. This case is now submitted and the record is now closed. Thank you very much. We'll take a quick recess before the next hearing starts. Thank you. Thank you. You know what? I think I broke the mics. I just remember Marcus last was joining. The key things were this. I touched it. But I didn't think I touched anything. I touched it once, and then something came on the screen. And then, yeah. But that's all I did was touch it once. A picture came up there. And then I was like, that's called prompts. I don't know.
There's nothing wrong
Yeah, what if you well, I don't want to say turn it off, but can you reset it? Why
The documentary exhibits, and then I'll admit the exhibits, and then we'll move on to hearing the parties' presentations. Okay. So, my office sent out a hearing binder that's a courtesy copy to everyone, and that contained appellants exhibits 1 through 4, and contained respondents exhibits A through G. Now, I'll just go over briefly that appellants exhibits 1 through 4 are written declarations, sworn, signed under a penalty of perjury. As I discussed during the pre-hearing conference, these declarations, in order to be admitted, as if the witnesses had testified in order for us to be able to give them the same weight as if the witnesses had testified in person. They needed to comply with certain regulations of the government code that included a special notice, and CDTFA objected at one point, saying that they did not include that notice, and that's correct. But I can still admit them as evidence. And I will just confirm, CDTFA, you have no objection to the exhibits 1 through 4 being admitted as ordinary evidence?
No objection.
Okay. And previously, appellant had indicated that he had no objection to the exhibits that CDTFA had submitted, exhibits A through G, correct?
Correct.
Okay. So if there's no objection to any of the exhibits being admitted into evidence, I will admit them now. So I'm admitting exhibits, appellant's exhibits 1 through 4, and CDTFA's exhibits A through G. Okay. Okay. And then I'll just review what our schedule is today, and then we'll go ahead and have presentations from the parties. As we discussed during the pre-hearing conference, appellant will have up to 30 minutes to present his argument, and that will include Mr. Paria's testimony. Okay, now what's going to happen is I'm going to swear in Mr. Paria under penalty of perjury, and you, Mr. Paria, you can testify, and then each of the representatives may also make a statement, an opening statement or an argument, but they will not be sworn in as witnesses, and I will just consider what they're saying as argument, but not as evidence itself. Okay. All right, so as I said, appellant will have up to 30 minutes to present his argument and testimony, and then CDTFA or the judges may have questions for Mr. Paria as a witness. And then next, CDTFA will have up to 30 minutes to make its argument, and the judges may have questions for CDTFA. And then after that, appellant will be permitted to make a brief rebuttal, and the judges may ask questions of either party at that time. Does anyone have any questions before we begin?
No.
Okay. Does the appellant wish to make an opening statement before Mr. Paria testifies?
Yeah, this case is, I just reviewed it, it's about untrue statements by auditor and rushing to judgment with no proper evidence. So that's the whole case all about. That's what we want to discuss.
Then if Mr. Paria is ready, I will swear him in as a witness. Mr. Paria, will you please stand and raise your right hand? Do you swear or affirm that the testimony you are about to give will be the truth, the whole truth, and nothing but the truth?
Yes, I do.
Thank you. Okay, Mr. Paria, you may begin your testimony. I don't know if your representative wants to question you or if you just want to testify in a narrative format where you just speak.
I'm going to question him.
All right, go ahead.
Mr. Paria, when did you come to the United States?
I came 2001. 2001 with my wife and 2 children. I'm coming to USA.
And how did you come here? As what?
As a refugee.
As a refugee. And then, so 2001 you came to the United States.
Yes.
So the fact that it says you've been doing business from 1981 with no pre-sale numbers, it cannot be correct because you came to the United States in 2001.
Yeah, it's correct because I came 2001.
Okay, and then when you came here, what did you do? How did you make money?
First of all, I started with the valet parking and then catering with the reception, or somebody called me. I go work for keep my family, making money.
Okay, And then what?
And then in my valet parking and then catering, I meet the photographer in reception. When I valet parking, they say, if you're a photographer, I can hire you. Sometime I have a wedding, you can help me. For the lighting or something, you can help me. I say, okay. I start that job with the prestige photography. They pay me check. And then Rafi's studio, Zoom, photo, video. All the guys, they call because I'm honest, working hard for them, and then they pay me. I keep my family, that's it.
So did they ask you to go open a business in order for them to be able to pay you as a subcontractor?
Yes, of course, because they say you're good person you open your own business. I say I don't know because my English is not very well. I can handle this style. I don't have camera. That's why they say no. You open the business. I put my business name. I love the golden picture. I put my business, and then I start with them working. They pay me check, and then I'm working with them. Sometimes, honestly, somebody say, "Oh, you're good. Why you come my birthday, take a photography?" I say, "Okay, no problem." A side job, I take a side job.
But your main earning was working for others as a subcontractor to help them out with the lighting, with the sound, with all
Yes.
these things.
Yes.
And this was until when?
Until 2011, when my job is getting better, because photography for the wedding every weekend or monthly 2 wedding, because nobody get married too much, because every month 1 wedding, 2 wedding, and then site I go to the valet parking, and then the work with the catering. I make money for keep my children, for going to school, or that's it.
So the combination of all these income was reported on your
Yes.
income tax as Schedule
Yes,
C.
yes.
No more question, Your Honor.
Okay. All right, do you have any cross-examination of the witness?
No.
Go right ahead.
I had one question, or a couple questions. Was your business Golden Picture and Video?
Yes.
And that was the 410 South Central Avenue in Glendale?
Yes.
Okay, so I guess I'm just confused because CDTFA had submitted a copy of your website for Golden Picture and Video at 410 South Central Avenue, starting with established in 1981. Golden Picture has serviced the community for over 25 years. Is that not your website?
That's my
1980.
That's my website, but for the networking or something, everybody, I don't know, that time they make a website for me, they write it around for 81. I'm not here 81, I'm coming here 2001. Why you know what I'm saying? Every businessman in the website, they put 50 years I'm doing this job.
Okay.
He was photographer since 1981, but he did not come to United States until 2001.
Yeah.
So on the website, he said that I have experience since 1981.
Okay.
In 1981, that makes him like 19 years old, 20 years old, so just became a photographer.
Yeah, I just wanted to know if that was your website, or if you were disputing that was your website, because there was that exhibit in the record that CDTFA was yesterday was for your website. So I just basically wanted to confirm that is in fact your website.
Yeah, the way it's written, that has been in operation since 1981, without sales permit. That's not correct.
Okay,
Because
I
he
got it.
did not, he was not even here until 2001.
Okay, and I did have another question about that website. The reason why I was asking is because CDTFA had submitted additional exhibits of customer testimonials. For example, there's a testimonial in June 2013 that we recently got back from our honeymoon, and Carmen said we can come by in a week to pick up our CD of wedding photos. And I think, as you understand, the issue here, CDTFA is saying tax applies because you transferred, the taxpayer transferred a tangible personal property like the CDs to the customers. And as I understand it, you're saying that you didn't do that after 2010, but on the website there's testimonials saying that TPP, the CDs were transferred to the customers, you know, in 2013, 2014. So I'm just wondering if you could possibly explain your position versus, I guess, the testimonials on your website.
Okay, that time, okay, you're correct. Sometimes we give it to, on the CD, give it to them, but after that, they audit me, and then they say, you have to pay 17,000. They close my account, and then every month, they took money from my account, $1,000. I don't have money, I want to go to bankruptcy. My wife angry with me, make a big problem with family. I paid off to 660, I pay off, and then after 1 month, same case number, again audit me with the same case number. They audit finish and then again open the audit, going back to the file. That time I don't have any business. I can't keep my family.
Okay, so I guess I'm just trying to understand the issue, your position. So you're saying that you agree that there were some taxable sales after 2010, that you're just disputing that all of your transactions were taxable like that?
Yeah, they charge me and then I pay.
That's correct. He did give some CD to customers, but after 2010 or 11, we all live here. How many of you guys have album? How many people you think they want their pictures in an album? How many people they want to print a picture 4 or 5 times to give one to in-laws, to give one to this? Nowadays, everybody get their photo electronically. Same thing in my business. I do taxes for 34 years. For the last 7, 8 years, nobody wants the copy of their tax return. Everybody wants it electronically. Why? Because it's easy for them. If they want to get a mortgage, they forward it to them. Same thing with pictures. People, they don't want to have a CD because they have to store it. People, they don't want to have album because they have to store it. And then if they want to give a copy, what they got to do? They got to print. And then, so since 2010, he might have given few CDs here and there for people that they're not technology savvy, but 99% of people, they want them on electronic.
Okay. So I guess I just have one more question related to that, because CDTFA had also submitted, it looks like vendor invoices from Express Video Supply and media distributors showing, for example, 200 DVDs purchased in December 11, 300 DVDs in December 12, 200 again in January 13, another 200 DVDs in October 13, and another 214 January 14. It looks like there's a consistent or regular amount of purchases of DVDs in a large volume. I'm just wondering if is that going to the customers, or is that some other purpose, some other service that you provide, or some other sales that you provide, or maybe if you could just clarify why there is so many DVDs being purchased if 99% of the customers were getting entirely electronic transactions.
Okay, that time hard drive is very expensive, but the CDs, the Blu-ray CDs is 25 cents or something. I buy a lot of, I have all my image backup for sometime customer or somebody I work for them. They say, oh, I lose this picture, I try to help them. I have a lot of CD in my home. I can bring all my 2011, 10, 12, 15. I put on the CD. Now, 8 terabyte hard drive is how much? $100. That time I buy the CD Blu-ray because all image I save it to that.
So he say he used those for backup of his own things, but customers,
Yeah, sometime
the
I
wedding pictures, they're not gonna fit on one CD or two CD. So most of customers, they are bringing their own flash drive or hard drive.
Yes, hard drive,
that
own
he was
hard drive.
downloading and
Okay,
taking.
both of you?
Yes.
One at a time, please.
Okay, sorry.
Thank you.
Okay, so,
Actually,
So
but
one
please go
thing-
ahead and finish what you were saying, one at a time. Whoever wants to speak first. Mr. Paria.
Okay, thank you so much for everything. Please, when I come in America, I know that this country is very good. I love America, God bless America, because I know everything is right here, you know. One of the correct, because I paid $17,000. I have a very pressure, very bad pressure. I keep my children going to school, my daughter getting doctor. You know, I try to be good person for this country. Please, judge is the correct everything because I'm right.
If I can get you each to finish what you were saying about the purchases of the DVDs, the invoices that showed that you were purchasing DVDs. I think you both got cut off because you were talking over each other.
But the DVDs, they were purchased for his backup, to back him up and keep him in his business in case people, they want a copy of them. But the customers, they were getting their stuff either on a hard drive that they were providing or a flash drive that they were providing. And one of the things that BTFD, is it BTFD, did not question the taxpayer is from all of these CDs and video and stuff that you purchased, how many of them there's left? This is just like people that they were in pager business. A lot of them, they left out with a whole bunch of pager, which at one point of time, they realized that they have no value. Same thing in this business. He did not know that all of these things are gonna come to an end. That people, they're not gonna start wanting a CD or DVD and, you know. So he purchased this, they look at the invoice, but because they're only interested on one side to represent the department, rather than being fair to the taxpayer, they never asked them. In this report, I don't see that they asked them, how many of this is left in your inventory? Maybe he bought 200 and he has 190 of them there. Did they ask him? No. They have statements here that somebody called and they said that he told me to lie, to do this, and he sent them a written statement to say that he did not receive a tangible asset. But then it says that he called and he said, oh, he told me to say this. So this person, if he's a liar, then he's a liar. If he's not a liar, then he's not. In this statement, it should not be here, because the department, if somebody's calling and making a statement like that, I think the department should take that in writing and have the taxpayer the opportunity to cross-examine that, to find out if that person is there or not. So these statements that's added here, these are all statements that does not really make any sense. It's all one-sided. Like here on page 6 of Exhibit 1, after they call this XYZ letter when they cannot determine, so they know exactly how many letters are sending out, and they know exactly how many letters they received back. In the second paragraph here on line 14, it said a few of letters was returned to BTFD. What does it mean, a few? Is it 1? Is it 2? Is it 2 out of 1,000? Is it 1 out of 1,000,000? What is a few? Rather than to say, we send in 400 letters and we received only 10 back. A few letters were returned and it says that, yes, we received personal property along with services. So this was not sufficient. They did the second time. The second time, it was to the benefit of the taxpayer, so they decided not to include it because it's not to their benefit. And it's written here. If you're sending this letter out, you cannot say, well, the first one, because it's to our benefit, we're going to accept them. The second one is not to our benefit, we're not going to accept them. And the whole issue of this is based on the purchases that they made. Because he purchased this, that means he sold them. It's just like to say, oh, because today is raining, then it's winter. There is no evidence to show that this was sold. On the next page, there's one testimony, line 3, page 17.
Which exhibit are you looking at?
Exhibit A, page 7,
okay, go ahead.
line 4,
Sorry, go
line
ahead.
3. According to one of the testimony of petitioner website, now, a user stated that petitioner provided a great package deal with blah, 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 blah. Now, again, one of the testimony, out of what? Out of 100? How many testimony was there that this auditor went in, that he said one of the testimony? And we're not disputing. Yes, 1 of 100 people, not everybody was getting electronically, but very few people. In this room, there's like 10 people now. How many of you now get pictures, actual pictures, printed and keep it in album? How many? Raise hand. None. That's the whole issue here.
Yeah, I know I said I had one last question, but I did have one additional follow-up. I think this will be my last. And you had, this doesn't work. You had mentioned that sometimes the customer provided their own media stick or whatnot. I'm just wondering if you have any idea roughly of the percentage of transactions where you provided the DVD versus where the customer provided something on their own to
No,
copy.
because he did not know. See, when they give him a business license, nobody told him that he needs to have a resale number. He was operating from 2005 until 2012. The department went there. His accountant didn't tell him that he needs resale number. Now, when the department went there, they find out that all this CD that he's purchasing, he's paying sales tax on it.
Yeah.
Did they give him credit for that? No. Why? Because it's not to their benefit. For all these CD that they got, the invoices that he bought 100, 200, all of them, the sales tax been paid. I want to know why that sales tax was not given credit to him. Why everything was denied? Because it's easy. In the department, it's easy to get it out of my desk. I'm gonna finalize this and send it out, make it somebody else's problem. This case is basically a case that the auditor did not do their job. And we're going back and forth, back and forth, back and forth. There's still hundreds of photographers out there that they don't know that they gotta pay sales tax. Who educate them? Nobody. If they go get a resale number, are they gonna tell them? Are they gonna test them? No. The minute that you get that resale number, they assume that you know everything. If you're a mechanic, you go and get a resale number, nobody will tell you how to tax people. You should know by yourself. It's the same thing. He did not know that he has to get resale number. Hadn't he known, he would have get it and not pay sales tax when he was purchasing all these items. He did not know until the department came And then when the department came, still his accountant told him that, no, you're mistaken, this is all labor. This is all service.
Okay.
Thank you. Okay, let me pick up with a couple of questions. So, I want to make sure that I understand correctly. It's the appellant's position that the customer provided a blank CD or DVD to Mr. Paria, and Mr. Paria downloaded the photographs that he took onto the blank CD or DVD and gave it back to the customer. Is that correct?
Yes.
Hard drive.
Right,
mainly
one
hard
at a
drive.
time, please. Let me hear from Mr. Paria first.
Sometimes they do hard drive. They bring flash drive. They buy 32 gigabyte. They bring to me, and then I put the pictures, all picture over there, and then give it to them. Because I know that my office is very small. I don't print any picture. I don't do anything. My office is closed only with the appointment. I'm working outside. I'm not 24 hours working with the job, because every month, 2-3 wedding or one birthday, one commissioning, not every day. Every day I'm working another way.
So when you say hard drive, you mean a flash drive?
Yeah,
Not the
flash
hard drive on
and
the
then
computer.
Hard drive, sometimes they have a enlargement picture, they bring just too much picture I put on the hard drive. And then now we send it with the drive box, with the internet.
Okay, so that,
Dropbox.
okay, so the customer would bring you a blank, and you would put the photos onto the blank
Yes.
and give it back to them?
Yes.
Okay.
And then they go to the printer shop or the make an album. They go by yourself, they buy it. Sometimes they don't know, they coming know that way.
So regarding the testimonials on your website, is it your argument that all of those testimonials were were about transactions that were before 2010?
No. His testimonial is that
The testimonials meaning the sentences on your website that are appear to be from satisfied customers who say that you provided them with a CD or a digital album.
I have in my website, you see over there, it was a box for we take a picture and then put in the box. They can open it in your home and then save it by yourself.
But on your website, it's in Exhibit E. I can give you the page. I think it was. Exhibit E. It's page 209 of Exhibit E. The Golden Picture website, it says, for example, it's a review from someone named Eddie, who says, "I was in shock when I saw how beautiful my wedding album and video came out. You get your video and album very quickly."
Yeah, because we design the picture. They do by yourself. I don't print album. In my office is like this. Printer shop for the album like this big machine, $200,000 machine for to make an album. I'm not doing that. They coming in my office, see my office. They coming in my office, they see my office. Small office, you can't walk to them.
Well, then, also in Exhibit E, there are testimonials from the website harsonic.com, where the reviews say things like the customer said that they would come by and pick up a CD of their wedding photos. And that's again Exhibit E. It's a couple pages down.
Yet there are some clients that they want them on CD, but not everyone. That's why here on the testimonial, they found only one testimonial that the guy said, I got this, but out of how many? There's 100 testimonial, and there's one person that he said that I went and I got the CD. Okay, that's what we're saying. We're saying that 99% of these, they're not taxable because they've been electronically transferred. But there are people still that they want on CD if they fit on the CD.
So you're saying these were the exceptions?
I'm saying that, yes, he does give CD out for people that they want it. But since 2010 that he formed his new website, very rarely people they want that, because this is headache for people to have an album. What are they going to do with their album? When they have it electronically, it's easy to share, easy to do, and easy to maintain. Why was he forced to have that website? Because that's how the customer wants it.
Do you have any questions? Do you have any further questions? Okay, then
Yeah, there's TFA, but
I'm going to move on to that next. Not forgotten. Okay. At this time, we're going to move on, and we will hear CDTFA's presentation, and then you'll have a few minutes left for rebuttal at the end. Okay. CDTFA, if you are ready, you can go ahead with your argument.
Thank you. The department's statewide compliance and outreach program contacted appellant around October 2012 and determined that appellant was required to hold a seller's permit. During the audit, the department obtained 51 of appellant's contracts from 2011 through 2013. Appellant's contracts found in Exhibit E, pages 75 through 110 and 406 through 456, state that no tax is charged on photography and videography services. Appellant shall own the copyright in all images created and will have the exclusive right to make reproductions for studio samples, such as enlargements or a sample of video services. And they also state all photography images and videography clips will be provided on the client's own DVD and hard drive. Appellant's contracts also include sections titled Photo Package Information and Video Package Information. In both sections, there is a space to indicate whether images or videos are to be provided on the customer's DVD or hard drive. 49 of the 51 contracts indicated that images and or videos would be provided on the customer's own DVD or hard drive. The department received additional information from 7 customers found in Exhibit E, pages 192 to 196, and Exhibit F, pages 530 through 534. And those customers indicated that either appellant provided images or videos on a DVD or hard drive, or that appellant provided images or videos on a DVD or hard drive that the customer provided. Based on this information, along with appellant's purchase invoices found in Exhibit E, pages 49 to 56, 269 through 272, 364, 366, and 395. Those purchase invoices show large quantity purchases of blank DVDs and DVD cases, as well as customer reviews that have already been mentioned, which are found in Exhibit E, pages 241 through 267, and 463 through 490. Those customer reviews indicate that appellant provided tangible personal property to his customers. The department used all of this information to determine that appellant sold tangible personal property and owed tax on those sales. On March 15th, 2013, appellant filed his sales and use tax returns for fiscal years July 1st, 2005 through June 30th, 2011. And on August 20th, 2013, appellant filed his sales and use tax returns for fiscal years July 1, 2011 through June 30th, 2013. In total, appellant reported total gross sales of $477,000, or $477,268,000, and claimed the entire amount as non-taxable labor charges. Giving appellant the benefit of the doubt, the department accepted appellant's reported gross sales with no supporting documentation, which was an almost $200,000 reduction from the audited taxable sales. And then based on the department's findings during the audit, the department disallowed all of appellant's claimed non-taxable labor charges. Pursuant to Revenue and Taxation Code, Section 6051, California imposes sales tax on a retailer's gross receipts from the retail sale of tangible personal property in this state unless the sale is specifically exempt from taxation by statute. Section 6006, subdivision B, states that a sale includes the producing, fabricating, processing, printing, or imprinting of tangible personal property for a consideration for consumers who furnish either directly or indirectly the materials used in the producing, fabricating, processing, printing, or imprinting. Section 6091 provides that all gross receipts are presumed to be subject to tax until the contrary is established, and the retailer has the burden of proving otherwise. Finally, Section 6012 states that gross receipts include the total amount of a sale without a deduction for the cost of materials used, labor, or services that are a part of the sale. Because appellant transferred images and videos to his customers on DVDs or hard drives, appellant owes tax on his gross receipts and cannot take a deduction for labor or for his services that were part of the sale of the DVDs or hard drives. Moreover, even if appellant transferred the images and videos on DVDs or hard drives provided by his customers, appellant would still be liable for the tax as the production or fabrication of tangible personal property for a consideration is a sale when the customer provides the tangible personal property that is produced, fabricated, processed, or imprinted. Accordingly, appellant owes tax on his gross receipts. Appellant has provided 3 statements that were signed under penalty of perjury, which are found in Exhibits 1, 2, and 4. And those statements come from photography studios that are indicating that appellant provided contract photography work for them, which means basically that he was hired to take pictures and then download them onto the studio's computers, or that he provided editing services. While we do not dispute that appellant would not owe tax in a situation where he was hired by an outside studio to only take photographs or video and then to download those onto a computer or hard drive at the studio, the statements provided are not supported by documentation establishing that appellant did in fact contract with these businesses to provide photography or editing services. Moreover, these businesses are no longer in operation, which further complicates our ability to corroborate the statements. Appellant has not provided any contracts with these studios, and without a contract or some other documentation, we are unable to make accurate adjustments for any potential services that were not part of the sale of tangible personal property. Basically, in the end, there may be some of the disallowed claimed non-taxable labor. There might be some gross receipts that did derive from services only. There just hasn't been any documentation provided to the department that would allow us to make accurate adjustments to the disallowed claimed non-taxable labor. Moreover, again, the department accepted appellant's reported sales without any supporting documentation. So even then, we have, for example, during the first audit, the department looked at appellant's records and found that for fiscal year 2011 to 2012, there were $135,000 of taxable sales, and for that same period, appellant only reported $80,000. So there are some that was an audited amount. Sorry, audited taxable sales were $135,000 for that period. But again, there were only $80,000 reported by a taxpayer. Again, essentially, appellant did receive a benefit from the department accepting his reported sales that he reported after the fact in 2012 and 2013. Based on the foregoing, appellant's gross receipts are subject to tax, and he has not established that he is entitled to any deductions for non-taxable labor.
Thank you. I probably have just a couple of questions for CDTFA. Go ahead.
I did have one or two questions too. I guess I'm just first, if you could address the taxpayer's contention, because you did have these invoices showing that tax was paid with DVD purchases, and I think they were contending that they're entitled to a tax-paid purchases resold deduction for the DVD purchase invoices, and I'm just wondering if CDTFA has a position on that, because I don't think that's a new issue that they brought in.
To the extent that taxpayer could show that the DVDs that he purchased tax-paid were sold to his customers, then yes, the department would give a tax-paid purchases resold credit.
I also understood their testimony to be that those purchases weren't for DVDs that they transferred to customers, but rather that they just kept those as backup images, because their testimony is also that they didn't resell it.
Okay, and I guess I did have one other question, just a quick clarification. I know there's been some adjustments made. Is the remaining amount at issue that's entirely disallowed?
Correct.
That they reported that was disallowed, there's no audited understatement?
No.
Okay.
And these are questions that I developed from looking at the materials, so not necessarily based on what I've heard today, so just kind of making sure that I'm following along. Did the audit rely on any estimates of appellant's income?
Right, well, so what happened was there was an initial audit that did rely on certain figures of how much for example, the contracts were for things like weddings, engagements, birthdays, and so the original audit did rely on the amounts for those contracts, but like I said, the amounts at issue today are completely 100% based on what appellant self-reported on his sales and use tax returns, and whatever he reported, he claimed 100% of that amount as non-taxable labor, and all of that was disallowed. So that's what's at issue today.
So we don't need to be concerned with arguments about that estimates based on appellant's income were incorrect, because ultimately, you're saying following I think it's called a re-audit at some points, but it was actually a revised audit, that the revised audit was not relying on that.
Correct.
Okay. And was there any sampling in the audit? In the revised audit that CDTFA ultimately relied on, was there like a sample size, anything like that?
No, again, because the reliance ultimately that we're dealing with today was self-reported gross receipts by appellant. So the audit happened, but it's really no longer at issue because the amounts were self-reported by.
So again, any arguments that a sample size was incorrect, that's not something that we need to worry about, because ultimately we weren't relying on samples.
In some of the initial briefs provided by appellant, they did talk about that there wasn't a discussion about the sample, and they were concerned because they only provided a handful of contracts. That's not at issue now because of the self-reported amounts.
Okay, I understand. Do you have any questions?
No, I'm okay.
Do you have any further questions, sir? Give me just a second. All right, then if no one has any further questions for CDTFA, we will now have time for rebuttal from appellant. You may proceed.
Yeah, this income of 477,268 that was reported from 2005 to 2013, like I explained earlier, this is the income that he earned through his photography, through his parking cars. However, he was getting money. It was reported on Schedule C, and that totals to 477,268. Now, if the department did not examine that and they accept it, they should not get credit for it. This is the total income that he had from different sources. However, the department, they concluded that this is all from photography and all of them is going to be exempt because there's one testimonial that people, they got CDs and so on and so forth. There is no evidence for department to disallow all of these sales. There is some sales that's made on hard drive to clients, but not all of them.
Judge Brown, can I
Yes.
respond to that just quickly, just to clarify? I think there's a little bit of confusion.
Certainly, go ahead.
I believe appellant is referencing the federal income tax returns when he's referencing Schedule C, and we are referencing sales and use tax returns, which presumably shouldn't include any valet, like income from like valet services. And the amount that was disallowed was disallowed because appellant claimed 100% non-taxable labor without any supporting documentation. And appellant, again, referencing back to the statutes, appellant bears the burden of establishing that gross receipts are not subject to tax. And so because of the lack of documentation, the department disallowed those claimed non-taxable sales.
Thank you for the clarification.
You're welcome.
And appellant may proceed with his rebuttal.
Nothing further.
Nothing further? Okay. Anything further from CDTFA?
No.
Okay. Give me just a minute to make sure I've asked all my questions.
No, I think mine's been answered.
Right. And then I've heard all the arguments from the parties, and I have admitted the exhibits, and I believe everyone said that they have made all of their arguments and they're concluded. Everyone's asked their questions. So at this point, I can conclude the hearing and close the record. I would like to thank everyone for coming in today. Following this hearing, my co-panelists and I will discuss the evidence and the arguments, and then we will issue a written opinion within 100 days of today's hearing. Okay, if there's nothing further, then this hearing is now closed. Thank you all very much.
Thank you.